Welcome, everybody, to day 4 of Binance Blockchain Week. My name is Kat, and joining me is Sarah, and we'll be your host for today. Since today's theme is on founding the future, we're turning the spotlight on innovative crypto founders and leaders in the blockchain space.
Thank you, Kat, and welcome everybody. Thanks for tuning in. So a quick note, if this is your first time joining us, we've been preparing some special edition NFTs for each day of Binance Blockchain Week. And during today's event, there'll be 2 opportunities to scan QR codes that appear on screen. And each QR code will contain 200 NFTs. They're first come, first served. So download Math Wallet and keep watching for a chance to take home some of today's NFTs.
Well, before we get started, I'd like to thank our sponsors, Dodo, Chromia, Frontier, EasyFi.network, Amazon Web Services, Stratis, Scale Network, VITE, and Standard Tokenization Protocol for supporting Binance Blockchain Week. Now, Sarah, can you walk us through our first session of the day?
Absolutely, Kat. Thank you. So let's begin. First off, we're chatting to Binance CFO Wei Zhou, who has some updates to share with us. Wei, thank you so much for joining us today.
Thanks, Sarah. Hope you guys are having a great day today. Good afternoon from my time here in Asia. So today I have a couple of exciting announcements to make to our community, primarily related to the Binance Smart Chain. The first really big initiative is the Most Valuable Builder program. So as many of you know, we currently have a $100 million fund set up for builders on the Binance Smart Chain to connect CeFi and DeFi. But the latest program, sort of the Most Valuable Builder program, aims to help BSC-based startup to gain, industry exposure and accelerate their business growth. So we invite all startups that's currently building on BSC who have actually signed up for the BUIDL Reward program to come join the MVB. I think participants from the Gitcoin Hackathon, the HackerLink grants, the Build Up for Bharat, and the Africa Master classes are also encouraged to join as well. I think based on the predetermined selection criteria, we will be shortlisting around the top 10 startups who will secure a $10,000 grant each for a total of $100,000. And then the final 5 projects that sort of goes through this will actually receive a seed funding of up to $100,000 each. What is the timeline? The applications for the first round of the MVB program opens from the 8th of February. And it will last until the 28th of February. So during those time, anyone can apply through sort of the BUIDL program. And then shortlisting of these projects will start by the second week of March, and the seed funding will be announced by April. So stay tuned as the BSC team will put out relevant information shortly. So on top of this MVB program, what we're also going to do is over the next couple of weeks is actually we're going to bring back BSC community voting. We hope to basically continue to build the Binance Smart Chain ecosystem and to bring further the BSC sort of awareness in the industry. And I think the second program we're looking at is actually we're incentivizing users to vote on the high quality BSC projects to list on Binance.com, and also to enhance, I think, the search for top quality BSC projects for further business development, investment, and technical support potential. And the timeline for the BSC community voting proposal, we aim to launch the community vote following the Chinese New Year holiday, so around mid to late February. So those are the 2 top announcements that I have. Both of them is to support the overall ecosystem within Binance, but primarily to support the BSC ecosystem and to sort of encourage further development on the BSC. So thank you very much. Sarah?
Very much. Thanks for joining us this morning. And that's really good news for the community. So what a good way to start off day 4 of Binance Blockchain Week. So we'll be back after a short break.
Welcome back, everyone. Don't forget to share your thoughts on today's event on social media using the hashtag Binance Blockchain Week. Now, for our next panel, we'll be taking a close look at the impact of blockchain and crypto on new and emerging markets. These markets often serve as innovation centers for new crypto products and ideas, and the companies and projects who have their ear to the ground get valuable opportunities to identify new trends before they go mainstream. So now we have Christine Lee from CoinDesk TV moderating this panel. Over to you, Christine.
Hi, everybody. I'm Christine Lee, your moderator for this panel on the blockchain factor, exploring the potential of emerging markets. I am an anchor and host at CoinDesk. We have some exciting news ourselves in the month of February. On February 8th, we're launching a slew of shows. I will be hosting a morning show in New York called First Mover, where we'll look at the global headlines around the world. In the blockchain industry, we'll have a lot of newsmaker guests as well. Some of our first guests we anticipate are Anthony Scaramucci, Nouriel Rubini. We're going to have a lot of good debate. One of our first guests will be Brian Brooks, who was the former head of the Office of the Comptroller of the Currency. So we'll get a good understanding of the regulation front in the United States, where he left it off, where he thinks it's headed. So very exciting stuff. In the afternoon, I'll also be hosting a show called All About Bitcoin, which is a deep dive into all things BTC. We'll look at market analysis, my favorite thing, volatility. We'll talk to analysts about it. And for the crypto curious, we'll also get into the basics of Bitcoin, wallets, how to hold Bitcoin custody, et cetera. So that should be all good. We also have a couple of other shows, Future of Money, The Hash, that's a debate show. We'll look into social topics of the day in Bitcoin, and that would be a fun show. So very exciting stuff at CoinDesk. You'll see it all at coindesk.com on YouTube, and we'll tweet it out from time to time. So on this panel, we will hear from trailblazing crypto founders to discuss the lasting impact of blockchain technology on new and emerging markets, which serve as innovation centers where the latest crypto trends and ideas get their start. And that's according to the little blurb. So very exciting stuff. Actually, we have an awesome panel of international guests. I'm very excited about this. We have Yele Benamosi from Bundle Africa, Sam Bankman-Fried, FTX, he's all the way in Hong Kong, Peng Shui Kai, Tokyo Crypto in Indonesia, and Nishal Shetty in India from Wazir X. So maybe we can go around, starting with Yele Benamosi, Bundle Africa in Nigeria. Give us an introduction.
Hi guys, I'm Yele, CEO of Bundle Africa. We're based out of Lagos, and we're essentially building the easiest way for Africans to get started with crypto. And we also bridge fiat and crypto as well. So on Bundle, you can send and receive cash to anyone via a username or phone number. And you can also exchange cash and crypto together. We've been around for about 8 months, but it's been probably one of the most exciting journeys of my life. Thank you.
Excellent. Very exciting stuff. I'm very much looking forward to getting into all things of how crypto has impacted Nigeria. All right, Sam, tell us about yourself.
Yeah, my name is Sam Bankman-Fried. I'm the CEO co-founder of FTX, which is a global crypto derivatives exchange. I also started up Alameda Research, a crypto market making firm, FTX US, a US-based crypto exchange, and I've been advising Project Serum, which is a decentralized ecosystem built on the Solana blockchain. Recently I've been thinking a lot about how to grow out the crypto space, our user base, and the product base to global traders, both institutional and retail.
Excellent. Okay. Peng Shui Kai. Now, your company is based in Indonesia, but right now you're in Singapore. So give us an introduction to what you do.
All right. So hi, everyone. I think for short, you can call me Kai. That's fine. That's what most of my friends call me. So I am the CEO for Togo Crypto. So Togo Crypto has been around in Indonesia since 2018. We were the first exchange to be regulated in Indonesia under the Commodities and Derivatives regulators over in Indonesia. And since then, we've grown to become one of Indonesia's top exchanges. being key focus of it being the fiat to crypto exchange, same like Bundle Africa. So we focus a lot on the fiat side, and since then we have partnered up with Binance to release the Binance IDR stablecoin, and that's available on Togo Crypto. So users can very easily deposit or withdraw rupiah into their Togo Crypto account, and also transact using BIDR easily between their different crypto wallets. Yep, that's all. Thank you.
Excellent. And last but not least, we have Nishal Shetty from Wazir X. Give us an intro into what you do.
Hey everyone, I'm the founder of WazirX. We are India's largest crypto exchange. We launched in 2018, and in 2019 we were acquired by Binance. Apart from not just one of our most important objective is to make it really easy for people in India to buy and sell cryptocurrencies. And along with that, we've been fighting for bringing regulations in India, because that will help us grow the crypto ecosystem in the country. So yeah, we can talk a lot about that during the show.
Can't wait to dive in. We've got a stacked panel. I love it. Okay, so I'm going to share my screen first of all, because this is pretty wild. Let's see. Okay. Let's see if I can figure this out. Come on. Yeah. Share. I'm going to start off with, shoot, what can you guys see? Oh yeah. Can you see Nigeria protests show Bitcoin adoption is not coming?
Yep.
So this is pretty wild. So there have been protests, sweeping across Nigeria. And here we have Yele tweeting out, on October 2019, I got kidnapped by stars. I was less than 2 minutes from my home. They refused to listen to anything I said and took me from Lekki to Aja, then all the way to Ikoyi, whilst stopping and harassing other young adults. I'm not sure how many cars they stopped and robbed. So I mean, Nigeria has been, going through some social turmoil with these SARS officers allegedly killing a young boy in southern Nigeria. Protests are erupting. There's police corruption on the rise. Young people are protesting. They're raising funds, trying to confront this terrible abuse of government corruption. So in that situation, how does crypto come into play? Yali, tell me about what you've been going through, and you set up crypto wallets to raise money to confront this. How does crypto play into emerging markets in this context?
Yeah, so I mean, the Q4 of last year was probably one of the craziest periods I can remember. At the time, there were ongoing protests around NSARS, which you rightly described. There were a rogue police unit that were harassing predominantly young people, especially if they thought that you were if they thought that you had sort of like money that they could get from you. And during the protests, there were some challenges with kind of the coordination of raising funds and capital. And, I thought that it would make sense to also expand the kind of avenues to raise capital. At the time, there were no issues with fundraising through normal fiat. But we opened the first sort of Bitcoin and Ethereum and sort of big BNB wallet that was used to raise capital. And over time, that became like the predominant method that young adults from the diaspora were using to raise capital to fund, or at least to keep the protests sustaining. And I think for a lot of people, that was like the first time where we're seeing Bitcoin being used in a non-speculative manner. And I think like that is the central theme of Bitcoin and cryptocurrency in most African countries in 2020, right? You went from sort of this, asset class or this from something that was people knew about to something that people could see was being used in the real world. And so I think today, one of the biggest use cases for crypto across Africa is around remittances, right? So right now we have like two different exchange rates. You have like a central bank exchange rate that the banks use, and then you also have like a parallel market exchange rate, which is because of the lack of FX or USD liquidity. So essentially, Bitcoin is an alternative medium of exchange between any fiat currency and NGN in Naira. And is driven sort of like a tremendous growth in the entire sort of crypto ecosystem in Nigeria and across a lot of other African countries. I can touch on a couple of other things, but I think it's really interesting to see, so many people, not just from retail users and even kind of like local institutions and some banks that are thinking about like, what can they do with crypto? And I genuinely believe that, by within the next 2 or 3 years, we will see as much remittances and cross-border movements through crypto as with USD. That is kind of like my call for Africa.
Interesting. I'm hearing a lot of excitement from young people in Nigeria, especially all over West Africa, using blockchain technology. So are you just seeing a wave of people of interest trying to get into this technology, trying to create projects? And how is the government reacting to that?
Yeah. So I think one of the things that the government has done is to not stifle the innovation and the excitement of the space. So in 2017 was when I began to get really deep into crypto. I made my first investment into a company called VITE. They were one of the kind of main crypto companies in Africa. And I joined Binance Labs in 2018. And at the time it was, there are not that many active sort of investors who are investing and supporting young entrepreneurs. And I think that's one of the things that personally I loved about Binance, because it was quite clear that, they weren't just looking at Europe or like the West, they were focused on kind of other emerging markets. And so we invested in a bunch of companies, and these companies have kind of become some of the main, crypto players across Africa. And that has actually spurred up the whole entire ecosystem, right? So one of the things that I'm super excited about is from the 31st for about 8 weeks, we're doing a bunch of masterclasses. So Binance has partnered with Bundle and a bunch of other local players to train 1,000+ developers, right? So I think that what you have is awareness and excitement. Where there is a gap right now is the skill set of actually building applications on the blockchain. And a lot of times this requires local context. So, my hope is that, some of the developers from this masterclass and from this kind of like curriculum end up building really, really important things moving forward.
Okay. What is the current situation with the whole SARS movement and cryptocurrencies in Nigeria?
So right now, I think I would say it's somewhat of an impasse in that there have been some gains. We had this list of about 5 demands for the government, and they were able to sort of meet a couple of them. But, you can't really say, the protests were completely a success. There were a number of things that happened and are still, really playing out. But I think what it showed a lot of young Nigerians was that, number one, we can coordinate in a decentralized manner. And, there is this alternative financial system that has true utility, right? And can be moved in a peer-to-peer manner. I think like that idea of decentralized coordination and sort of decentralized finance, and not necessarily about DeFi, but, a true peer-to-peer monetary system that is outside of the kind of control or pressures of governments was very, very, it was probably one of the most exciting periods of my life. And I hope that, some of these lessons can be further applied over the next 5 to 10 years.
Wow. Yeah, especially among young people, I would think that it would inject a strong sense of empowerment and this ability to, you know, bypass decades of development such as in the United States, where all these regulations and banking crises have been built and then regulated upon to get to where the financial system is right now. But Nigeria can kind of bypass all that and create this new digital system. And yeah, I mean, the potential for that is enormous, very exciting. Then I want to jump into Sam's world. I saw this article that caught my the man who saved Sushi Swap. Last year was quite a whirlwind for you, Sam. When when Uniswap was basically subject to the vampire situation of Sushi Swap stealing a lot of their liquidity, and Chef Nomi, one of the founders of Sushi Swap, suddenly creating this drama, stealing or seemingly to steal $14 million of investor funds, and then eventually giving it back, but then giving the keys to the project to you. I mean, that was crazy, and apparently you did a good job of handling $1 billion in investor funds, and eventually ceding control or handling the migration from Uniswap to Sushi Swap, and then giving back control to the community. So props to you.
Thank you.
So now I'm curious. That being said, we see the dangers of this digital open financial system and giving it to the people who, may not be so well versed in the compliance and regulatory processes of the financial world. And when they're given the power of the financial system, sometimes they may not be ready for it. In that context, what were the lessons learned from that experience? Your thoughts on decentralized finance and, the potential for emerging markets having access to that power. Is that a good thing, or, is that dangerous?
Yeah, it's a really good question. And, I think that in a lot of ways, I see DeFi right now, sort of how the rest of crypto looked, 5 years ago, where it's really in its infancy. And I think that there's a ton of power to it and a ton of potential. And, I think sort of some of the most powerful things about it are really the composability of it, where two people can build two different applications, two different products on chain, and then they can talk to each other and they can natively interface with each other. And in fact, one product can easily be built on top of another product. And that makes it just, a lot easier to start building out whole ecosystems, because, each product doesn't have to try and reinvent the wheel. It's not like each individual product that needs some way to have, asset trading in it needs to build a DEX. They can all compose on the same, underlying order books. And because of that, you can sort of potentially get this exponential growth of products and features and applications. And, anyone can build a front end for any of these products and host it. And both help sort of spread the product, and also sort of, integrate it into whatever their sort of larger vision is, and customize it. So I think it has a ton of potential, but it's pretty immature as a space. And you've pointed to some of the reasons for that, with sort of really not super well thought out controls and systems and trust structures. And if you really drill into what happened sort of with Nomi, there's just, sort of a ton is amateur hour sort of all around there, with that sort of incident with the Ethereum, because, where you ended up in a position where there's a guy with an anonymous Twitter account, who had sole control of a wallet with, $15 million of Ethereum, and it had some vague label like, I think it was the developer fund, according to some, and no one actually had really thought about what what that was. Like what was the purpose of that? Was that just like something Nomi can? He's the developer. That mean it's his? Is it for all the future developers? Is this really for the development of the project going forward? Is this to be voted on by the sushi holders? I mean, it's like there's no answer. They sort of hadn't been, hadn't been enacted, and so neither had a trust structure in place where it was a known person sort of managing those assets, nor did you have any discussion of what the intention was with it, nor did you have any controls on it or time locks or anything like that or multi-sig. And so it was sort of like the situation really, really ripe for a shit show of various sorts. And in fact, it happened, And I think, Nomi's tweets certainly make it seem like when they took the Ethereum, they thought that was basically legit. They're like, yeah, I'm the developer. This is the developer fund, and no one else thought that. I mean, that's definitely not what other people thought was going on.
Definitely not the perception.
No, not at all. And it was, I mean, I think most people would not have thought that in his case. I think it was like not the natural assumption for him to make, and certainly not the reasonable thing to just take it without having a discussion about whether everyone is on the same page about that, which they weren't. But I think it also highlights, like, yeah, that sort of this sort of really messy scenario that most industries avoid via a few different a few different methods, and didn't happen there. And you see that all over the place in DeFi. I mean, everything from like just products that make no sense in a lot of places to this sort of like semi self-aware, semi not self-aware atmosphere of quote unquote aping into to tokens with no due diligence at all, no idea what they are, no idea who's making them or why. They go up, then they go down, and then everyone gets right, and then everyone gets
crazy,
right, and everyone gets pissed when they go down, and it's sort of like, I don't know, like I understand, yeah, it's a really shit thing on the the rug was a really shit thing to do. On the other hand, what the fuck did you think was going to happen? Like, and it's just so like the whole thing is sort of a mess in a lot of ways. And that doesn't mean it doesn't have potential. All that potential is still there. And we haven't even gotten to the fact that it's all on a chain that has 10 transactions per second total to split between all of these projects, which is like 5 orders of magnitude less than you need. And so, yeah, there's a ton of potential to DeFi. I'm super excited about it, and super excited by some of the projects I've been working on, potentially, really, particularly with Serum. But these spaces very much.
I like your optimism, Mika, that you say, oh, it has a lot of potential. I know people are just flat out scared and had enough.
Yep. Lots of good things start out messy, and sometimes it takes longer than you think it should for them to iron out their growing pains. But
So where do you see the potential for emerging markets in this decentralized world?
So I think that and this mirrors crypto in general a lot. There's a lot of things that you take for granted in some countries, and I mean, if you're in the United States of America, right, and you want to pay for something, it's not generally considered hard to do. Kind of independent for almost anything. It's like there's a ton of payment methods. If you dig under the hood, it's unbelievably messy. It's a total shit show. And it's like, you're going through like 6 different companies to like send someone $3. And like it really shouldn't be necessary. But in fact, the country just spent $1 trillion building out companies to kind of like fill these slots in awkward ways, but it sort of works. And you have these payment processors and credit cards and like PayPal and bank accounts and wires and ACHs, they all fit weirdly together. But again, there's so many resources thrown at it that it does in the end basically work for consumers. You then kind of go to the rest of the world, not all the rest of the world, but a lot of it. And all of a sudden, like payments look a lot different. And, not just payments, but I mean, remittances, anyone who's tried to do cross-border transfers, it's a huge pain. Like not just huge spreads, but often it's like almost impossible to figure out how. You want to invest in some product, they might just not offer it in your country, not even because it's illegal, just because like no one's bothered to figure out how to offer the services in a compliant way in your country. You look at, lack of localization, lack of language specificity. You can only onboard to some services if you have the right currency. There's just a ton of ways in which these systems are very clunky, and that starts to show when especially as you start to move into these emerging markets. And and I think like LA obviously had some much more poignant and important examples than the ones I'm bringing up of this, where I, especially when you start to worry about those in control of some parts of the system, that just like, really doubles up the importance of having robust financial rails that everyone can use. And I think that's, obviously the promise of crypto to some extent is a money system that everyone can use. And I think part of the promise of DeFi is a monetary system that everyone can use, a financial system, everything from, yield and investments to trading, bar lending, and, structured products and sort of everything else. And done in a way which is, just sort of generalizable and can surface the whole world, or at least a lot more of the world than PayPal will necessarily service. And so I think that's what a lot of the promise of these systems are, if they can sort of shake away their rust and get. And I think the two biggest things are, first of all, just building well done products with teams that have their shit together and like not kind of gaping holes. But the second is scaling, because none of this is valuable if you're not getting beyond 1,000 people.
So you say, the current financial system has, all these settlements, all these transactions, front-end processors, back-end processors,
Yep.
and but it seems that the digital finance world, it also has its problems, but you think that it will eventually overcome and be more efficient and et cetera, and be perhaps more safer and regulated to the point that the traditional financial sector is?
I think it definitely could be. And I don't want to make a statement that's too confident here, because, I think it's totally possible that at some point DeFi loses steam for a while. I don't want to say that it definitely will, but I do think that there's a lot of appeal there, and that in particular, like a lot of these things, just obviously they should all be online. Like any pieces of this that aren't are just going to slow the process down. There should obviously be universal ledgers. The sort of fragmentation of the financial ledgers that you see, and the privateness of them, makes it really impossible for any external system to interface with them in a clean way. And so, I think that it really could help revolutionize a lot of pieces of this and just make them way quicker and more efficient if it irons out its problems. And again, I don't want to promise it will, but I think if it does, then it's going to have a lot of utility and a lot of flexibility that it's going to be really hard for fragmented private systems to compete with.
And if any of you other guys want to jump into the conversation, please feel free to add your 2 cents as well. But I want to get on ahead to our other 2 guests as well, Kai and Nishal. So Nishal, okay, emerging markets have a lot of potential to utilize blockchain technology and benefit from all of the opportunities it unveils of the decentralized, global liquidity, et cetera. So in India, however, I've heard that there are problems with the government in terms of how their views on cryptocurrency. I mentioned to you earlier, I have a friend who runs an exchange in India, and a couple of years back was having problems. You've had a recent win with the government in trying to be more open toward cryptocurrencies. Give us a sense of what is happening in India regarding that right now.
Sure. I think the period between 2018 to early 2020 was when we had a banking ban in India. What that meant was, as a crypto business, you were not allowed to have a bank account. That virtually got you out of the traditional financial system. And the way us exchanges survived in the country was by providing a peer-to-peer buy and sell for people, where we connected the buyer and the seller directly. But in March 2020, we won. So when this ban happened, we had gone to the Supreme Court of India, which is like the highest court in the country. And eventually in March 2020, we won the case against this ban. So now there is no ban. We can have bank accounts, and we can accept user deposits of fiat and also process their withdrawals. So now it's clear. And the effects of that has been where To give you an idea, the trading volumes in the country before the banking ban, uh, and now there's a 10x difference. So it's increased by 10x in just about 9 months since the ban was lifted. So that shows how important, at least in the, see, we are all fighting. In a way, the narrative is a lot of crypto says you don't need banks, but to onboard all of these people onto the crypto ecosystem, you need to build on ramps and off ramps. And that is where, partnerships with banks are very, very crucial. So, and that is also one of the reasons why we are sort of fighting for regulations in the country so that it becomes easier for us to onboard people onto the crypto ecosystem. So that's happening on one end. The other part of it is, I think today I can confidently say that the Indian government is moving more towards understanding and trying to figure out what this is, as against in 2018 where there was sort of negativity. So today there's no discussion about a ban. It's more on how do you regulate this sector, and what are the other countries doing. So there's a close watch on what the US is doing, what the EU regions countries are doing. So I think there's a lot of positivity now, and there's a lot of hope as well, and that's becoming more evident in the kind of new startups that are emerging in the crypto ecosystem in India. There's a lot of startups in the DeFi ecosystem coming from India. So all of these entrepreneurs are also now more confident, all because the government is going towards a positive direction in terms of regulation. So I think the next maybe the next 2 to 3 years, we're going to see a lot of people in India onboarding into crypto. And knowing India, we are one of those. I usually like to say that we usually come last, but we come in large numbers. And that's going to happen to crypto, where we're going to see millions of people from India onboarding to the crypto ecosystem. And that's going to give a lot of boost to, I think, centralized products as well as the decentralized ecosystem. So I look forward to the next few years where India will come in millions of users getting into crypto. I think that's going to happen.
Do you think that one of the things I heard about India was that they were going to develop their own CBDC, and perhaps that was why they were against Bitcoin, Ethereum, and other altcoins. Do you see that as something inhibiting innovation in that front, or do you feel that entrepreneurs are going ahead with this and you're feeling like they have the full backing of the government? And what are your thoughts?
See, I think the CBDC idea has been floating around for a while. And in the beginning, I think the understanding within some sections of the regulators was that it's either CBDC or decentralized, tokens or coins. And now the understanding is that it's going to be where CBDCs can coexist with decentralized tokens and coins, and it's not a competition. CBDCs will fulfill a need that is very different from what Bitcoin or Ethereum or all the other tokens are doing. So I think there was a lot of misinformation because there was a single-minded approach of looking at crypto as pure currency. Nobody thought about their use cases, that there are tokens for specific use cases. But now there's more clarity coming in, and they're understanding what are the classifications of different tokens are also being more known in the country. So I think the whole thought that before the government was against it, because the government also thought that either you get your own token or the decentralized tokens are going to exist. I think that confusion is now disappearing. So we are seeing more positivity.
Okay, that's fantastic. Kai, let's go over to your part of the world in Indonesia/Singapore, where you are right now. Indonesia also had a very restrictive look on cryptocurrencies. I believe that they banned cryptocurrencies. Am I correct? Bitcoin and such. And so, if so, how have you operated in an environment where the government may have looked at the blockchain industry in a negative light?
Right. Thanks. I think first off, I think I could say the same for both Nishal and Yele, is that being a fiat to crypto exchange, yes, we do have a lot of impact coming from the regulatory side of things. And yes, Bitcoin and cryptocurrency is still currently being banned, but it's being banned in Indonesia to be used as a form of currency. So essentially, it's a very unique kind of ban. It basically disallows people using Bitcoin to use it as a form of payment, use it as a form of purchase. However, cryptocurrency is currently being regulated in Indonesia under the Commodities and Derivatives Regulators in Indonesia, or Bapepti for short, and it's regulated as a commodity, as a digital asset. So that's something that's kind of interesting in Indonesia, in that with this particular oversight by this government body, it essentially gives exchanges, fiat to crypto exchanges, the regulatory certainty to be able to operate. Yes, we are able to have access to banking accounts. We are able to connect to digital wallets, or they call it e-wallets over in Indonesia, which is a very big thing. Such things, wallets such as GoPay and OFO. These are very big digital wallets over in Indonesia. So in that aspect, I think that for Indonesia, at least there is definitely a more certainty in terms of the regulations. Pre 2019, there wasn't any regulated exchange that was in existent in Indonesia, and it was in November 2019 that Toko Crypto became the first fiat to crypto exchange to be regulated under this government agency. And I think that is a very good push for the crypto industry in Indonesia, as it essentially solidifies the presence of blockchain technology and cryptocurrency in Indonesia. Furthermore, President Jokowi, Indonesia's president himself, has also stated that Indonesia has to continue to innovate and be creative and embrace new technologies such as blockchain for Indonesia to be able to basically, like what Yele and Nishal mentioned, to basically leapfrog and to essentially to improve the financial ecosystem, improve the financial sector in Indonesia. Because in Indonesia, although there's 270 plus million people, there are close to 92 million people that are currently unbanked in Indonesia. And it is a very large percentage. Also, an interesting point to note that Indonesia itself is geographically decentralized, very geographically decentralized, with about 17,000 islands. And you just got to think of the logistical nightmare if you were going to do it the centralized way, to bring the traditional financial system to all these different islands. And naturally, it's a decentralized method is definitely something that would be able to create this network effect for people who are currently underserved by the traditional financial system. It essentially provides a very efficient, I would say, a very efficient and simple method for them to basically gain access to traditional financial systems or industries that have already tried the centralized method to basically bring these financial services to them. And by going through decentralized systems, they could essentially, get included in these financial systems, decentralized financial services easier. But with that being said, there are definitely challenges in Indonesia. Indonesia being a developing country definitely has a lot to catch up in terms of knowledge and education. Definitely in terms of the tech infrastructure, internet is not, it's not optimum at all locations within Indonesia. There are places whereby you can't get a stable internet connection. So definitely there's a lot of things that needs to catch up. But I think ultimately the regulators are very positive about the industry and the technology, and have been very optimistic and basically has been helping. We have been working very closely together with the regulators to help make the space a conducive space for the industry to grow in Indonesia.
You're from Singapore. I'm curious, why did you decide to open this crypto exchange in Indonesia?
That is a question that many people has asked, and so the simple answer is Singapore is small. Singapore, the founders and I, we felt that Singapore, being a country which is much smaller than Indonesia, is limited in terms of the outreach and the growth that we can potentially achieve. And with that being said, there were opportunities for us to start Toko Crypto up in Indonesia. We had connections with the regulators, connections with the banking system, which ultimately are the things that are required for us to successfully launch and sustain a fiat to crypto exchange. That is why, because of all these opportunities, the market size of Indonesia, that is why we decided to fly over from Singapore and basically start Toko Crypto from scratch in Indonesia.
Sam, you did something similar. I mean, you're from the United States, but you went all the way to Hong Kong to set up operations. What made you decide to make that move?
Yeah, I mean, it's almost an accident at the beginning. I went to a conference in Macau and then just sort of never left. But basically, there's just a ton going. There's a ton going on in Asia in crypto, and it sort of exposed me to a network that I didn't have before, and a lot of opportunities I didn't have before. And sort of after a week here, I had a month worth of things to do, and a lot of the volumes going up in Asia, a lot of the businesses are in Asia, and it also, frankly, coming from sort of a Western background, it was always going to be easier for me to interface with a lot of Western counterparties, but this really gave me an opportunity to sort of broaden that network and potentially be able to have relationships with with a more global user base. And then I think that was sort of the biggest thing.
Okay. Here's a just kind of a thought experiment for you guys. With the internet, we saw information being let loose into the world, and people were excited. We can self-publish, we can learn about and self-teach ourselves on videos. And I mentioned before the Khan Academy, all these educational resources can be made available to us, and more information than ever before. And that was a very exciting prospect. But we've seen in recent months that there's a lot of disinformation out there. In fact, it becomes to a point where what is real and what is not real becomes very gray in some people's minds. Now we're experimenting with this in the financial world. On the optimistic side, we can be very happy about banking the unbanked and very idealistic notions of open finance and all that, but is there could be a sinister aspect of it in people being manipulated and defrauded. So give me your take on, is having digital finance open and accessible to everyone in the world, does that introduce that element of danger, or is it for the greater good? And Yemi, I'll start with you because I haven't heard from you for a while.
So I think that, like any new technology, there's always going to be sort of potential downsides or like bad actors that use the technology in maybe unintended fashions. But what I like to think is I like to be on the glass half full side of the equation and believe that for the vast majority of operators like ourselves, we believe that this technology can be used for the right things and can create positive impact in the world, right? So just because it can be used for, not so great things or can have some negative unintended effects, doesn't mean that it shouldn't exist. So hopefully the net positive is a lot stronger, and given the lens through which I view blockchain and digital assets and kind of the gaps or issues on a lot of emerging markets such as Africa, I think that this is going to have tremendous positive change and effect on the world.
Yeah, Kai, what are your thoughts on that as you make your way through the Asian markets?
My thoughts are that sinister actors do exist. Has it happened? Yes. Will it happen? Yes. But my take is that although there definitely is a tendency for it to occur, and definitely there are control measures that can be put in place in order to control them, like what Sam mentioned just now. There has to be well thought control measures to be put in place to prevent such sinister acts from happening. But with that being said, there are many times whereby we don't know. We didn't even imagine that those things could have happened. At that point in time. For a particular scam or a hack to happen. So I think it's kind of like venturing into the dark for us in the crypto space. It's always about really. Only when we go through these phases of darkness do we then eventually can come out, a better version of this industry, I guess. But definitely there needs to be more thought and practices put into place to help protect the interests of the people who participate in this industry. And I have one interesting to share is that recently the regulators over in Indonesia have also came out with a new regulation that basically specifies which tokens can be listed on an exchange. It isn't something that is very onerous, but it's kind of like a blanket regulation that states that any coins or any tokens that wants to be listed on an exchange has to essentially fulfill a certain set of criteria, such as the founders, blah blah blah. So I think this is a good movement from the regulators because essentially it helps to protect the interests of those that participate in the network. So yeah, those are my thoughts.
Okay. Sam, I feel like you were at the center of, when things can go wrong. I'd be curious to hear your thoughts on this.
Yeah, it's anytime that you try to do something really new, there's risk of things going wrong. And I think that's true with a new industry and with an attempt to build new pieces of a financial system. And I don't think that is I think that's a real factor, and there
but you're playing with people's money here. There's
Yep.
a lot at risk.
Oh yeah, absolutely, and I think that is a downside to it. Like it just is, and that doesn't necessarily mean it's not worth it. And I think that there's a ton of potential here, but I also think that means that there's a ton of responsibility on the people in the industry to be as responsible as they can and do the best that they can. And I think that there's always obviously responsibility to your customers, but the higher the risk, the more effort you have to put into that. And it's a complicated, messy area, and you can't just sort of use a one size fits all approach and think that covers everything you have to do to protect your customers, to protect users of the platforms more generally. And I think that you see the consequences when there are failures there. Anyone who's sort of like looking at the Japanese crypto regulatory scene in early 2018 and saw the difference between pre and post CoinCheck hack, it was massive. It was, Japan was sort of going in the direction of being one of the more regulatorily friendly jurisdictions for crypto. And then, CoinCheck got hacked for, it was like, $800 million or something. And Japan all of it sort of turned on a dime and started to clamp down, and it's sort of not surprising that they did. And you can look at the still after effects of Mt. Gox that you see in the industry today. And so I think that those are both, those are some examples, but you see this all over the place in the industry, right? Like there's enough scams in DeFi that a lot of people don't take much of DeFi seriously, and that's not it's still really in the early stages, and I don't think people are necessarily holding this against its permanent record. But you can only do that for so long before the world just loses trust in a system. And which is all just to say that I think it's just really, really, really important that the people who are, building important pieces of this infrastructure do everything they can to, not just build great products, but build products that people trust, that work the way they expect, and that safeguard them to the extent that they can, and that generally tries to do everything we can not to make the world sort of even more scared of crypto.
It's an interesting thought because a lot of people who, proponents of the technology say, this is a trustless system, but in the end, you can trust in the software, but the teams that run it, you also kind of have to trust them to manage everything.
That's right. And, obviously, one of the pieces of this is like, it's trustless, but did you build a system with or without a bug? Even if you can never edit it again, was the first thing you released correct? And some of these systems aren't trustless. That there are a lot of centralized systems in crypto. I think most of the people on this panel are sort of affiliated with one, and those are things where human input is important, and oversight, and and sort of trying to squash all of the little things that come up, and make sure that nothing too bad can happen.
Well, we are coming to an end to our panel, so I'm going to end with some closing remarks. Nishal, what would you like to end off on what kind of note for our audience?
Sure. I think in the context of emerging markets, what I would like to put a shine light on is that I think this was discussed in the beginning. A lot of the developed world has built all these traditional robust financial systems, which either do not exist or are really weak in the emerging markets. And I think the way that these emerging markets would probably leapfrog is using the crypto ecosystem, because it's very similar. I'll give an example of how India did not really come onto the desktop revolution, but we all leapfrog to the internet using mobile phones. And I think something similar is going to happen, where India is going to leapfrog in the whole financial ecosystem through crypto, and the traditional ecosystems will not really be significant in an emerging country like India. So I think I look at crypto as that opportunity for emerging markets to really leapfrog in the whole financial ecosystem.
Very bullish outlook on India. Kai, what are your thoughts?
I think, for my opinion on Indonesia, at least for being an emerging market, is that for all the great things that are happening on blockchain, on crypto, all the new developments and everything that's going on around the rest of the world, but definitely I would like to see more coming out from Indonesia, more projects, more blockchain projects that are built by Indonesians for Indonesians in a certain sense, so that there's that element of localization at least with some of these projects to really boost the profile and to really customize and look after the people who really need these products. So definitely a lot of education and awareness needs to be pushed out in Indonesia, especially in also in all emerging markets, such as I think for India and Africa. I think a lot of education needs to be there, like to prevent, like what you mentioned, sinister acts from happening. So those are my thoughts on to close.
Yeah, and it's great to see teams like you guys entering in these markets and pushing that technology forward. And Yele, your final thoughts.
I think mine would be that some of the innovations or ideas that we see and hear about in crypto, I really believe that the true utility would happen on the continent of Africa. So I'm super excited about DeFi in terms of the ability to raise capital from a globalized a global sort of contributor base and provide capital to individuals or businesses that need it. And there are a bunch of ideas that we have that we would love to experiment on in the coming sort of months or 1 or 2 years. But Africa is the right fit for DeFi and digital assets because of a lack of legacy infrastructure. And we never had landlines. Most people don't have laptops. Went straight to smartphones and kind of internet connectivity on the move. I believe that the pure number of unbanked or underbanked people that have limited access to financial services, crypto will be, the native way that people get onboarded to some of these new ideas. So, watch this space and see crypto move beyond speculation. Thank you.
That is super exciting to see Africa bypass legacy finance and go straight into digital. Sam, your last thoughts.
Yeah, I think that, this industry is going to be what we make of it. And I want it to be great, so we should do what we can to make it great. And I think that means, building the products people want, building them well, listening to users, and doing that while being aware of, blockers of regulation, of risks, and doing what we can to manage them. And it's sort of a boring set of thoughts, but, if we do things well, better things will happen. If we kind of do a shit or a sloppy job, that's not going to be good for the future of the industry.
All right. Well, you're our leaders of tomorrow, so we're counting on you to build a, responsible, efficient, and good future versus the sinister one we see in Star Wars or other manifestations. All right, so I'm Christine Lee, anchor host at CoinDesk and TV. Thank you for joining us on this panel of exploring the potential of emerging markets in blockchain. Be sure to catch our show launches in February 8th on CoinDesk.com. I'll be hosting First Mover as well as All About Bitcoin. So be sure to catch us on the go. Thank you for joining us.
Thank you.
Meet the new builder. In the new age of rolling up your sleeves and getting your hands dirty. They're in labs, lofts, and war rooms, launching scrappy startups and reinventing big business. They see what doesn't exist, and they make it exist. They know the question isn't if, but when. They know the freedom to fail is the freedom to build, and they don't freak out when they run into a problem. These are the new builders, and we're the cloud that's obsessed with turning their dreams into realities. With the most capabilities, the most innovation, the most customers, and the most experience. We're the cloud that breaks down barriers. When others say no, we let builders say yes. Because we believe everything gets better when you let nothing stand in the builder's way. Amazon Web Services. Build on.
Thank you to the panelists for a fun and insightful conversation. We'll definitely be following what new trends and ideas emerge this year.
Yeah, absolutely. Thanks, Kat. So, okay, we've been looking forward to this next session on regulation and compliance. In this fireside chat, Perianne Boring, the founder and president of Chamber of Digital Commerce, will share her thoughts on the global spread of fintech and how founders can evaluate different jurisdictions to determine where they should headquarter their organisation. Perianne will be joined by host Andrew Ray, who's a partner at Morgan Lewis. And with that, we'll hand over to Perianne and Andrew.
Hi, and welcome to Binance Blockchain Week. I'm Perianne Boring from the Chamber of Digital Commerce, and I'm here with Andy Ray from Morgan Lewis. And we're going to have a chat on crypto economies and the loci of universal value. So we're going to talk about some of the macroeconomic themes that we're seeing in the crypto space. And some of the geopolitical and geographical trends that are impacting the growth of the crypto ecosystem. So, 2020 was just such an amazing year for, I think, everybody, but the crypto space in particular. I kind of saw 2020 as like the reset button for the global economy. We, of course, as a world civilization, have been navigating through a global pandemic, and part of the result of that has been government responses to that, including a lot of inflation. And that's led to a lot of investors and a lot of just people, frankly, really thinking through exactly what is money and how do we protect our purchasing power for generations to come. And in many ways, I think that has played a big role in just the incredible start to the year our community has had in 2020. I feel that the institutional case for digital assets, but Bitcoin in particular, has been made. Leading institutional investors are currently buying Bitcoin and digital assets and adding it to their portfolios as a diversification tool. You have public companies that are putting Bitcoin on their balance sheet for treasury management purposes. And that is a huge driver in the record growth that we're seeing in the crypto markets today. And this is just a really exciting time to be in the crypto space. I don't know, Andy, what say you?
Oh, I couldn't agree more. As you mentioned, I'm a partner at Morgan Lewis, which is a very big law firm, 30 offices all over the world. And one hat that I wear is I lead our fintech initiative. We've got about 250 lawyers in our initiative. And I always joke around that I'm at the tech end of fintech. And really, that's where the innovation is. And there's no doubt that this asset class is here to stay. And innovation is just continuing. In fact, it's accelerating. I tend to probably, like many of us, judge the forest from the trees that I see, but certainly, when you look at the trees that I see through the practice, that we have, we are seeing very high quality teams who are growing the digital asset category. Maybe 7 or 8 years ago, you didn't see as many entrepreneurs with traditional financial institutional background, but these days more and more members of management teams on the digital asset side come out of kind of big traditional finance. There is no question in my mind that there's a real tailwind behind digital assets these days, and more to come in 2021 for sure, Perianne.
Yeah, absolutely. And one of the things we've been navigating at the Chamber is the change in administration in Washington, D.C. And at the end of the year last year, there were a number of midnight rulemakings, which is typical when you have one administration walking out the door. However, one of them caused us to lose a lot of sleep over the holidays. And that, of course, was the FinCEN NPRM. And so for those who, I know many people have been following that very, very closely. For those who aren't familiar with it, FinCEN had issued a set of regulations that would have really changed what compliance looks like for virtual currency companies, money service businesses like exchanges, but also banks. And this was being rushed through the regulatory process. So initially, the Treasury Department was not going to allow any comment period at all. They're just going to publish them, final, no questions, no discussion, no input from industry. And we were able to get a comment period and influence that process enough so the industry could be a part of it. Albeit the comment period originally was only 15 days, which we argued was illegal. We argued that pretty strongly, and we ultimately got a full comment period. Kind of long story short here, there was this last minute effort to try to clamp down on the industry in a not very thoughtful way. The regulations were over 72 pages, and they could have had so many unintended consequences, not only just a huge burden on businesses on having to revamp and redo everything, even if they're even workable, and just the cost that would be to businesses, but also it could have had a huge impact on innovation. And it could have really prevented a lot of new ideas and new innovations from coming to market. So those are the types of unintended consequences and cost that aren't even measurable. But we spend a lot of time trying to figure out, like, what is the driver of this? Why are they trying to redo compliance programs that have been set in stone for many, many years? And my thought on that is that we're seeing record growth in crypto today, and some see that as a risk to fiat currencies. And so regulators are in a position where they're having to make a decision. Do we try to protect our national currencies, or do we let this new technology thrive? And I don't think that's the right way to think about this. I believe crypto and blockchain technology is the most important technology we are going to see in our lifetimes, and we should be doing everything we can to try to foster the development of this technology. But you're seeing these geopolitical pressures that are bringing increased regulatory scrutiny on our space. And there's just a lot of unknowns right now. And this FinCEN piece was a pretty big battle we were up against just in the past couple of months.
Yeah, a shot across the bow, or maybe more. We have a saying: law lags innovation. Law, by definition, law lags innovation. Law doesn't really anticipate innovation, and students of monetary history know that fiat currency isn't really all that old, and in many tales it doesn't end well. Hats off to you for achieving a suitable comment period where the different considerations can be weighed, and hopefully a more collaborative approach to innovation can be pursued. There are many complexities here, though, when it comes to digital assets. Financial services are really the most regulated industry in the world, more regulated than just about anything else. And in the U.S., often we have this really U.S.-centric perspective about things, and many of us who are not students of economic history have a strong confidence in the U.S. dollar, right, as a sort of a quote safe currency. Leave that debate for another day, but it can never quite get the number right. There's something like 230 different countries worldwide, and once you get past the U.S. dollar, you get past the the euro. There's a long list of other currencies, and I like to just encourage people to think about the wide range of countries that are out there. Think about Belize, which is a small Caribbean country that has a currency that's pegged to the U.S. dollar. Think of Myanmar, which just had a coup, and I think it opens the mind to a lot of the reasoning behind why digital assets are attractive. I had this discussion with somebody last week, and they observed that you can't own enough silver. You can't own enough silver to really have a proper hedge. And so but this complex regulatory regime in all these different, countries, and even in the U.S. with these, the federal and state overlay of regulation and the different, federal regulators. It just makes things, very complicated for the industry.
Yeah, and I mean, I think what's really complicated about the United States is we're kind of comparing jurisdictions here. What is unique about the United States is our federal government is we have a fragmented regulatory system. It's very different than, for example, in the United Kingdom, in the UK, where you have the Financial Conduct Authority, the FCA, and it's really a one-stop shop for all financial services related regulatory issues. Or Singapore. There's so much crypto activity and so many companies are choosing to domicile in Singapore. I personally have done many trips to Singapore just over the past couple of years. And they, kind of similar, they have a one-stop shop in the Monetary Authority of Singapore, but MAS is also their central bank and their regulator. So it's even more centralized in terms of a regulatory perspective. And I'm a fan of decentralization, but one of the ways as this can work against businesses is when you have many different stakeholders who have conflicting or different or various approaches to how they're regulating this space, that can cause a lot of complexities for companies and compliance teams that are trying to follow the rules, but there's so many different agencies you have to figure out. So, we have the SEC, here in the US, you have the SEC, where some tokens may be considered a security, and we still don't really have the clarity we need for companies like exchanges like Binance or Binance US to really know which ones are appropriate to list and which ones aren't. Like, we don't have true legal clarity on that. And then you have the CFTC, which oversees the futures industry. And then you have FinCEN, which is money laundering. You have IRS, where you have tax. And it's just like the acronyms just keep going on and on and on and on and on. And one of the things that we've called for at the chamber is to have a national strategy for blockchain, where there is somebody in the government that is in charge of the national strategy for blockchain technology to help coordinate these efforts, but also ensure that the tone that the government is putting out is one that promotes innovation. And of course, we want to protect things like the financial system and investors and consumers, but we need to be very careful that we're doing so in a way that doesn't stifle innovation or leave people so confused that they just decide to put their hands up and go overseas. So, I mean, that's one of the big challenges that we look at in the US. I know, Andy, you guys have a global practice and you guys are helping businesses all around the world. What are some of the other jurisdictions that are that seem to be welcoming to the crypto community, and where you're seeing companies domicile and thrive, given the support, the supportive regulatory climate?
Yeah, that's a great question. And sort of before I talk about other countries, just to underscore your point about the challenges in the U.S., I like to draw a distinction between the healthcare, the digital health ecosystem, and the fintech ecosystem. Healthcare generally is a very, very domestic market. You've got, in the U.S., this one of a kind, healthcare regulatory and payment system. In the UK, you've got the National Health Service. The provision of healthcare is quite local. By contrast, fintech generally, and we see crypto and digital assets as a subset of fintech. It's just inherently cross-border, international, and so the ability of a team to locate their business in many jurisdictions is it's great. They have a great ability to do that, and so even if you have Silicon Valley developers who are developing a sophisticated software or algorithmic platform, they have the flexibility to locate that company. Once they've developed the technology, they have the ability to locate it overseas. We like to divide the world kind of into regions, right? So you have, you have the U.S., sort of North America with a footnote that I'll get to. You have Asia, and you mentioned Singapore already. Some people know blockchain kind of got its start in Japan, and Japan is more hospitable to blockchain than China is these days. But I share your enthusiasm for Singapore. We would have had some probably more enthusiasm for Hong Kong a few years ago. Obviously, as Hong Kong is sort of drawn into China, that becomes much more challenging. But as I said, the U.S., Asia, then we have, of course, Europe, which is also kind of in the process of, we have Brexit. So, 5 years ago, the UK really it could have been predominant, incredible financial services industry, simple regulatory structure. With Brexit, there's, more uncertainty about that. That also, though, makes us wonder whether the so-called Commonwealth countries, right? Canada, I said I left a footnote about North America, Canada, Australia, that's an area that I think people pay attention to, but, it's still to be developed. Frankfurt aspires to be the, probably the financial capital of the EU, but the EU has a similarly complex, multi-layered regulatory structure. Switzerland just, adopted a new, a new law that's going into effect, right around now. So Switzerland also, I think, is competing for, for role, though it does take a while to get licensed in Switzerland. My last region is the Middle East. I think there's a lot of reason for optimism about, the UAE. You've got a sophisticated investor base there, highly integrated with the world economy. So these are sort of the regions that maybe a way to start to think about it. I guess I'd be remiss if I didn't mention Bermuda, by the way. Bermuda's taking a very open approach, and they have a strong financial services culture with reinsurance. Factors the teams take into account are fundraising. What's the fundraising environment like? Where am I going to raise capital? How hospitable is the region going to be to my fundraising efforts? And then customers. Where's my market? What market am I going to go after? It's hard to give a prescription to organize in one particular place, but those at least are regions that we think about and factors that we take into account in making the decision. Perian, I don't know if I answered the question or dodged it, but at least I gave you a long one.
Well, I think what is interesting when you kind of look at this global view of this ecosystem where it doesn't really have a clear hub today. There's a lot of hubs popping up all around the world for all the reasons that we discussed. And then there's, crypto is quite a conundrum for, I think, traditional regulators and policymakers. How does it really fit into the current system? And in some ways it doesn't. And I think that's a good thing. And I think some countries are going to embrace that because they see the benefits and the opportunities that come from this potentially disruptive, but critically important technology. And others will be afraid of it because they see it as a challenge, and and they'll choose to take their a different direction. In many ways, we draw parallels to the internet, to blockchain technology. And of course, the internet was created by the United States government, and it was promoted, and the federal government, it was really the Clinton and the Gore administration that encouraged the commercialization of the internet. And that led to a huge boom in the US economy. And I think it's been a huge factor in the US's economic leadership for many decades. Many of the largest companies in the world came out of that era. And I think crypto is that next era. And I think there's a very real possibility that the next Silicon Valley won't actually be in California. It'll be in a place where you have a jurisdiction, a government that wants to foster the development of this technology within their jurisdiction because they see its potential and they want those benefits to benefit the people within their nation. And I think there's a lot at risk here. I think if countries get that wrong, they have the risk of really losing everything. I think there's an economic security and a national security argument to be made there, but there's still time to get it right. And it's not going to be a straight line. It's going to be a very crazy and lumpy ride where there's a lot of ups and downs. But I think the next couple of years are really going to define the future trajectory of crypto. And I think crypto and blockchain technology is going to play a critical role in reshaping the financial and monetary system while we're in this global reset. Andy, any closing thoughts or remarks?
No, other than I agree with the parallel to the internet. And just to bring sort of a current example from that ecosystem, which may or may not be on people's radar, the country of Ireland has a very strong data center presence now, because they've been very hospitable to data centers. And in the U.S., Delaware, of course, is universally viewed as a very hospitable state for corporate law. It's universally accepted, in that role. But there's also a competitive marketplace in the U.S. among 50 plus different jurisdictions. And so I feel optimistic that kind of the competition among countries to, be supportive of, this new world, will lead to an outcome where we have an environment that fosters innovation and, frankly, wealth creation. But I'm just not smart enough to predict, Perry, on what country it's going to be.
None of us are. None of us are. Yeah, and I think that I kind of what I started with, the institutional case for digital assets has been made, and that's a store of value, so that people can save and share their wealth and preserve it throughout generations. And that is a huge part of what we're seeing happening in the ecosystem today. And I think that's a very powerful thing and something we should be helping foster and develop. Andy, thanks again for joining me at Binance Blockchain Week. Again, I'm Perry Boring with the Chamber of Digital Commerce. Thanks so much to the Binance team for having Andy and I on today.
Thank you all.
Scale is natively connected to Ethereum and the entire Ethereum ecosystem. Scale is built to power the generational leap in blockchain adoption. dApps built on Ethereum plus Scale will provide a frictionless experience along with high speed, openness, global reach, security, and privacy, all while staying truly decentralized.
Hello, welcome back. Hope you caught the QR code there. Massive thanks to Perry and Andy. That was a really, really good chat. Very interesting. Shame they didn't have the answers on the jurisdiction, right? Kat, what have we got up next?
Well, now we have Diane Dai from our sponsor Dodo. Take it away, Diane.
Hello, everyone. I'm Diane Dai, co-founder at Dodo. I'm honored to be here today talking about funding the future. The most important guiding principle of the future of crypto is openness. A lot of us went into crypto is because here is such an accessible space full of opportunities. crypto will never say no to you. From a crypto exchange business perspective, openness means bigger markets. The upcoming IPO event for Coinbase just proved that how much we need from crypto finance, but it's only a start. While Coinbase is fully regulated and has a strict process when it comes to listing new tokens, the emergence of Binance as a global exchange leader could be partially attributed to its more open, tolerant listing policies, which successfully expanded its user base. But openness doesn't stop there. We have seen how Uniswap basically revolutionized this space in 2020. What's the magic? That is, anyone can issue tokens and generate trading venues for these tokens on the platform. Countless liquidity pools have been created on Uniswap, which is feasible on CEX like Coinbase and Binance. Here at Dodo, we believe that we can take openness up a notch. Dodo not only has fully permissionless token listing and trading, it also enables a truly open way for market making that is also much more flexible and customizable. Professional institutional market makers can now operate markets on Dodo, like they do on CEX, just by setting up some pool parameters. What's more, retail investors can also get involved in the exact same way. Liquidity on Dodo is always just a few mouse clicks away, and everyone gets to enjoy the efficiency of CEX with the trustless features of decentralization. Here is a chart on the evolution of crypto exchanges. Here we can see Dodo. Dodo is an exchange that has achieved a remarkable level of openness across trading, listing, and market making aspects. One thing myself and my team believe in is say more yes to the people, and you will get more yes back from them. Thank you, everyone. The future is bright, and just Dodo it.
Thank you very much, Diane from Dodo. So we're already halfway through today's event, and for this next panel, we'll take a look into today's market and round up some important investment trends to look out for this year. So 2020 was a big year for crypto, and even though February is just starting, it feels like we're in a new era.
That's right, and people are watching the crypto markets now more than ever. So now we'll bring back Wei, who'll moderate our panel, Crypto Forecast, New Investment Trends for 2021. Welcome back, Wei.
Thanks, everybody, for joining into the blockchain conference here at Binance 2021 blockchain conference. And then my name is Wei. I'm currently the CFO for Binance. I also look at all of the investments here at Binance. And then we've had a pretty exciting year in 2020 in terms of bringing a lot of projects to our users and to the Binance platform, as well as launching a new way for, I would say, centralized exchange users to participate in sort of the DeFi boom craze, making money from it in terms of our Launchpool platform. So I'm really happy to be hosting the panel today, talking about investment trends in 2021, and then bringing basically, some of the leading minds in crypto from all over the world And I'll introduce our panelists here today. So first off, we have Graham Jenkins with CoinList. What's up, Graham? And next we have Kyle Samani from Multicoin. They've been making a lot of noises, and then basically, getting, and getting, getting into sort of deeper into relationships, I think, with a lot of the participants. And then also Ankit Gaur with EasyFi Network. Hey, Ankit. And then Avichal with Garg with Electric Capital, who have actually been quite impressive with their investment track record over the last few years. So I'll let the panelists do most of the talking here. So Graham, I'll start with you. And you guys are one of the key sort of places that projects go to come to the market. What are some of the trends that you're seeing that you saw, and then what are some of the things that's going to be keep things interesting in 2021?
Yeah, it's there's been so much I guess explosion of diversity of different token issuance opportunities and structures in 2020. CoinList got its start a few years ago during the ICO boom via SAF sales, and that was very much a hot trend a few years ago. But the space has really evolved, and 2020 was just a massive explosion of different types of token issuance, whether it's auctions, community sales, IEOs continued, obviously. Stake drops became a really big thing last year. And there's just teams are just trying lots of different things. There's no one size fits all anymore. So at least from a token issuance standpoint, looking forward to seeing a lot more diversity, especially going into 2021.
Oh, great. Thanks for that, Graham. Kyle, I'll go to you. You guys have been super active in 2020, and I don't think you guys are going to slow down in 2021. What are you seeing? What are you guys doing?
Thanks, Wei. Appreciate you having me here. Hi, everyone. Thanks for tuning in to Binance Blockchain Week. I think there's a few things that we're going to see really accelerate this year. One is I think DeFi is starting to proliferate across other ecosystems beyond the Ethereum ecosystem. The first kind of obvious example of this is the Binance Smart Chain ecosystem, but I expect to see that continue across other ecosystems. One thing that's become clear is that liquidity is less of a network effect than people think. As long as you can attract organic takers, you can get makers to show up. So we're going to see a lot more people trying interesting new ways to onboard takers in volume onto these other ecosystems, which is going to be super interesting. I think the other thing we're really looking forward to is the kind of rise of Web3. I think kind of the seminal moment here was when all the social media platforms, deplatformed Trump. And I think in 2 or 3 years' time, we're going to look back and be like, yeah, that was the moment. And so you can, if you look at, for example, at Arweave, like in the last 2 weeks, Arweave's price has been running like crazy. A lot of people have been pinging us, asking about Arweave specifically in this context. And I think that kind of mega trend is just getting started. So very excited to see that stuff take off. So I think those are the 2 big things we're going to see in 2021.
Great, thanks, Kyle. Ankit, I'll go to you. What are you seeing in terms of the space that you're in right now?
Yeah, thank you, Wei. So I completely concur with the thoughts that Kyle said. There are new waves in terms of the deployment of capital and utilizations that are going in, especially in the area of DeFi. And there are many more avenues which are getting explored than they were previously existing. So just to put it into a little bit more context, when we talk about DeFi, and he was talking about like as long as there are takers, there are always makers showing up. And that's definitely a fact, because today, if I talk about in most of the products, whether it's a lending protocol or a regular DEX or derivative exchanges, you got a lot of capital supply. But then when you talk about consumption side, that's where the real heavy lifting is required. And that is the area where we as a company are also trying to do work towards. And many other applications we are seeing when we talk about DeFi regarding Web 3.0, which are coming up. Another trend that we are going to be seeing in this area is basically making the investments that people are doing a little bit more liquid. For example, there are a lot of liquid staking projects which are coming up. There are many liquid derivative projects which are coming up. For example, Staffy is there, Mirror Protocol is there, where you can take a position in a certain instrument, and then you also get a liquid asset out of that particular investment, which you can utilize in various different places. So that is another interesting trend that we're going to see in terms of where industry is heading towards, and more so, many new blockchains, cross-blockchain communication, cross-pollination of projects is another important area that we're going to see. So these are like my 2-3 points on where I see personally industry heading towards.
And Avishal, I'll head to you here in terms of, what are you seeing?
Anyway, thank you for having us. Good to see some old friends. Like I told everybody before, my panels are a lot more fun if everybody just disagrees. They're no fun if everybody agrees. So everything I'm going to say, I'm just going to say I disagree with Kyle. So I disagree with Kyle. So to start, I think I don't fully disagree. I only like half disagree. So in reality, so a couple of thoughts. I think we're still at the very early days of layer one. Like I think technologists and forward-thinking people and pretty much anybody investing in blockchain right now, if you think about it, we're so far ahead of everybody else. And we're like in the early stages of this. And we have probably, I don't know, 5 to 10 years, like many years before we actually figure out which layer one protocols have won. So it reminds me of, there's this old Mark Andreessen quote. Mark Andreessen started Netscape in like 94 or something. And he said, basically he did, I'm going to butcher the quote, but it's basically, he did Netscape because he thought all the ideas on the internet were basically taken. Right. And so that's kind of where we are right now in crypto. So I kind of feel like we don't even know how the layer one stuff is going to work out. And I think there's plenty of really interesting stuff happening there. And I do agree a little bit with Kyle that I think that the taker maker dynamic is interesting, and liquidity is not a moat the way it has been in traditional finance. I actually don't think the decentralized infrastructure stuff is ready yet. I do think that what happened over the last 2 weeks with all the social media companies and Amazon and everybody sort of, exercising their ability to kick people off the platform, I think there's a real thing. But I think it's kind of like the Bear Stearns moment in 2007, 2008. And we haven't yet seen the Lehman moment. Bear Stearns was this, if you were paying attention, was a really big deal that they had to bail out their hedge funds. And then Lehman was the thing that everybody noticed, that they sort of sat up and said, wait a second, like that's big, like the whole system is corrupt. And then you got the moment where Satoshi released the white paper after that, right? And so I think we're still in the very early days of that stuff. I think it's going to take a decade for decentralized infrastructure to really like kick in and be useful, and for businesses to be able to build on top of it. So anyway, I basically agree with what people are saying in terms of what's going to happen directionally, but I disagree on timeline. I think it's going to take a lot longer than people expect.
Sure. Graham, I'll go to you then, just sort of to come back on sort of what Avishal just said. You guys are seeing, you guys are basically, one of the premium places that projects go to, right? And then as a result, basically you have a lot of investors that you guys sort of service today. What are you seeing on that front? Like, where is it weigh? Is it more, is the bargaining power still on the project side, or is just sort of like there's so many different types of accesses or different ways that project can go that, like investors are kind of like, diversified or decentralized to a certain extent?
Yeah, really good question, Wei. We're seeing plenty of diversity as to whether the projects have got advantage versus the investors. And I think increasingly the project teams are getting more skeptical of inviting in like a broad audience of investors into their communities. And I think historically there's been kind of a fundraising structure for project teams where they'll do some work with VCs or crypto funds, and in doing so they'll raise capital, but they're not really engaging with a broad community of token holders at that point. But those VCs or crypto funds, if they're good, they end up contributing to the success of the protocol by either running nodes or providing liquidity or having some kind of value add beyond just the capital. So there's some value in that. And then a little bit further down the track from a fundraising standpoint, project teams will they need to do IEO, ICO, some kind of broader community fundraise. And the degree of success or value that project teams are seeing out of that kind of varies quite a bit. And I think this is going to influence how project teams think about raising capital down the track. Part of the advantage, obviously, of getting lots of people to hold your token is that you've got a bigger tribe that is beating your drum on crypto Twitter or elsewhere. So you've got a larger kind of spectator audience that's rooting for your protocol. The downside is that you end up having kind of a lot of people in your Telegram and Discord just saying, when number go up. And that can be a really big distraction for teams, especially if you're still in the process of developing the protocol. It almost becomes like computer science is a spectator sport. You're trying to build your platform, trying to build your protocol. At the same time, you've got this audience of people either trolling you or cheering you on or what. So it's a very kind of weird and distracting dynamic. I mean, crypto has always been like this. I mean, even for Bitcoin, there are still Bitcoin trolls in Bitcoin talk. So, 10, 11 years later, people are still trolling that platform. I mean, it's happening everywhere. But I think a lot of teams the high quality teams want to be a little bit more focused on deliberately building their protocol, building their communities, being more selective. So I think it's going to be more and more difficult for kind of the broader community of investors to get access, especially, and obviously I'm just thinking in terms of token issuance and token sales. I just think it's going to be a lot more difficult over time for a broad community of investors to get access to deals. So I don't know if you guys are seeing that. Avishal, maybe you can disagree with this.
Yeah, I disagree with that. I think it's going to get easier because I think what's happening, what's fascinating about crypto to me is that it's in so many ways culturally a response to the concentration of power and wealth that we're seeing in the world. And there's this pent up energy, I think, in society, like globally in society, for people to say, like, that doesn't feel right to me. Like, it doesn't feel right that the top 10 richest people in the world have as much money as the bottom 50%, like literally the top 10 richest people, right? Like that kind of stuff just like really irks people, I think. And so there's this tremendous demand for people who aren't powerful and rich already to have access to investments. And I think that's both true on the investor side, but I think there are a lot of builders, there are a lot of crypto founders that feel that way, which is why I think you saw the ICO boom. I think that's why you're seeing sort of liquidity mining. That's why you're trying to see people push towards fair launches. And so when you see that kind of a dynamic, I think in a market, the market tends to solve that problem. So I actually think what's going to happen is people are going to create tooling that circumvents people like me, Graham, Kyle, and people, like the market will find a way around us, basically. And so our jobs get harder in the next 5 years as people start to say, well, do I really need those guys? Do I really want those guys? Or maybe they just say, yeah, they do. They add a lot of value. Like Graham's cohort of investors that he has are really valuable, or Kyle adds a lot of value. But you know what? Maybe I don't want to give him 10% of my network. I'll give him 1% of my network. And so I think our job gets harder and harder and harder. But it actually gets easier and easier for the average person.
Yeah, I think we're kind of, in some, it's definitely nuanced. I think even though a lot of these project teams may come at it from the standpoint of, yeah, we don't want massive centralization of wealth. And obviously, the philosophy of the whole space is around decentralization. But I think what a lot of project teams find out is that, when you do have thousands of token holders, and this has been the way for a number of years now, it's an enormous burden to try to support. And again, there's nuances to this. In a lot of cases, there's a lot of value in having thousands of token holders. In some cases, it's a burden, especially when a lot of those folks are trolling as you're building. So I think there's definitely a nuance there. These ecosystems really only survive if you do have lots of token holders and lots of token holders adding value to your ecosystem. But yeah, trying to get that balance right between those two things, I think, is definitely a challenge.
Yeah. What I will say, I think, is the mistake that you're highlighting that most project teams make, I do agree with, which is I think if you go out there as a project team and you just say, let me get as many people into my community as possible, you're going to get a bunch of trolls. And I think the right approach has to be, I believe it's like our project team and our purpose as a project is this. Here's what it is. And the explicit thing that you have to highlight is, here's what we believe that other people don't believe. Like, I think you have to create an in-group and an out-group. And that makes it very clear who belongs here and who doesn't. And that is like the centerpiece for, here's what we believe. And it's not about price, but it's, the anti of this other group of people. I think coalesces like a group of people that talk a little bit less about price and are more willing to stick with you through the downturns. And not enough project teams do that. They just kind of want as many people as they can get, instead of a smaller number of people that rabidly believe what they believe and are explicit about the things that they don't believe. And that's what makes things like Ethereum and Bitcoin so strong, is it's so tribal, but that's the thing I think most project teams don't get right. And then you just get flooded with the people that just say when moon, and that's, that's really distracting.
Yeah, it's all about targeting. I mean, it kind of goes back to, it's almost like the old days of equity fundraising, which I guess still happens. But a lot of startups going out, as soon as you start getting advice on fundraising, the people advising you will say, just be very targeted in terms of who you're raising from. And the scale is obviously different in a crypto context, right? Instead of trying to target 20 to 30, high quality angels, you're targeting, potentially hundreds of thousands. But you've got to be thoughtful about it. You've got to target, you've got to think about what you want. Who are those people? What are they doing? Where are they right now? What communities are they circulating in, communicating in? How can they contribute? And you just got to be thoughtful about it.
Yeah, and it has to be a natural extension to piggyback on that, Graham. It has to be a natural extension of the platform or the technology or the trade-offs that you've made for the product. Like, I think Solana has done a really good job of this. Like, if I had to pick a team that just is like opinionated, like they're opinionated in the technology that they picked, but then the way that they talk about it, I think, is also very opinionated and very much in line with the technology stack. And that's why it works so well. Like, it feels like there's an organic community forming there. But that's why I think it works well. I don't know if you have thoughts on that, but.
When I know you were kind of wanted to talk about Bitcoin and funds and other stuff, we're obviously focused more on kind of layer one sales, but are we okay to continue down this track?
No, we can talk about it. No, I think that's a really good point in terms of like the trends, right? Because like one of the major trends, I think, is basically the idea of a tribe, different tribes forming, and then do I want this group, right? Obviously, do I want this group as part of my tribe, right? I mean, I can have Kyle talk a little bit about it, because I think you guys are pretty critical in terms of putting not just money, but like a lot of time and resources and your alliances that you've built into sort of what you've done with Solana, right? And I think another things you said is basically I think this year we're going to see a few more public chains coming out as well, especially with the from my end, we're seeing the Binance Smart Chain gain some traction as well, and I think that's something that hasn't I would say kind of been under like what's the word, like under the radar a little bit of a lot of the sort of the project developers. So Kyle, maybe you can speak a little bit about that, and then Ankit, I'll jump to you after that to speak a little bit about from a project's perspective. How do you guys, in terms of building your tribe, in sort of like in the DeFi sort of that wave, right?
Yeah, so I have a lot of thoughts on this. So one, I don't think it was ever intentional at Solana to it wasn't we're going to talk about the tech in this way because we expect the community to form around us in this way. And Solana, Anatoly is kind of the heart and soul of Solana, and he is just like the engineer's engineer. And he only ever wants to talk about like speeds and feeds, which is like the antithesis of like what like Apple made Apple famous. And that's just like how his brain is wired. And like it's actually kind of driven me crazy talking to him, trying to get him to not do that stuff, but he just keeps doing it because that's what he loves. And what's been interesting is that his kind of repeated just focusing on just sheer software and performance has drawn those kinds of people, who are also interested in that around him. And you're seeing stuff like Serum, where like Serum really only works on Solana. And so it's been interesting that kind of self-selection is happening. So that's been positive. It was never meant to be divisive, but certainly the self-selection has been effective. I'm actually more skeptical of the word community than probably everyone else in crypto. I kind of hate the word, almost to like a point of principle. Communities are necessary for like to some degree, but I think people overstate the value of them. Communities by definition don't scale. Like there's just like a Dunbar's number problem of like how many people can actually talk to and relate to other people. There's value in having like ecosystem resources and like good developer tooling and good developer docs and examples and stuff. But like beyond like the first 1,000 or so people, like 1,000 people who really care and aren't just like one moon, I'm pretty skeptical that it matters. And like just kind of fundamental like tech matters and go-to-market matters a lot more. The thing that's funny about the word community is that if you have a bunch of people who all say community matters and they're all part of the same community, then they're all just kind of patting themselves on the back, saying, "Look, we all matter." And so you have to be very kind of cognizant of that circularity going around and like how much marginal value is it really providing versus people who really are executing. So it's not a very popular opinion, but like I'm generally one I believe pretty strongly, and it's kind of informed a lot of our investments.
Sure, Ankit, do you want to jump in here just to speak a little bit? Yeah.
Yes. So I would like to talk from a project's perspective. Like I've heard all the three point of views from the investor's perspective and on the community side. So in my perspective, building a community from the time a project is launched, especially in today's time when already there is enough being done in terms of tribes, in terms of the infrastructure layer, for a project, it is like the journey of growth of a child. So there is a requirement of a balance to be made. So initially, unless you don't have good numbers coming in, you're not being recognized by anybody, either by the investors, by the exchanges, for you to at least sustain into that particular period while you're building the protocol. So it's a journey. So there is always an initial thrust that is needed. Once you get that, then there's a churn. At a point, you need to mute yourself and block yourself from what's happening in terms of letting the people decide who they want to do and focus on the project and the protocol so that your protocol talks about it. And I can say this because personally, we have experienced it. So initially, we hit a very huge amount of TVL because we were giving eel farming, and the moment we stopped, TVL vanished. People still are there, they're still watching, and it was required. But then essentially now when the focus on the building side happens, then gradually actual people who want to use the product, who want to use it, that starts to come in. But you still need those numbers, that murmur to exist, to exist in the ecosystem, to exist as a competing product. Because by the time you come out with the product, you get it properly being utilized with all its features and continuous development, the organic number is actually a derivative or a funneled out number from the larger number you have. So it is pretty much a similar kind of a funnel approach that generally you have when you go for any enterprise sales. So you generate leads, you sell it, you filter them out, and then finally you get your actual potentials. And the bigger the bigger funnel, the top funnel, similarly you get a better conversion ratio in terms of the absolute number. So in my perspective, yes, there are challenges to maintain that number, the tribe, but essentially it is required to keep the project alive, to keep the discussions alive, the things alive, while you're building the protocol into the level where it is actually being accepted by the actual users. So these are like my 2 cents on that point.
Sure. Avishar, I guess I'll go back to you then. Just sort of like, you mentioned that one of the key points that you see is basically, forget the layer 2. I think layer 1, we still need a lot more use cases. We still need more, more interesting things to come out of that. What are you investing in then?
Yeah, well, I think, when you look at the layer 1s still and what gets built on top of it, I mean, I think obviously we have DeFi and we're still in the early innings of that. I think anytime you look at a platform, the first, maybe I would say 3 to 4 years, maybe even 5 years of it, depending on where you start measuring, are very skeuomorphic, right? They're the kinds of things that you saw in the old world and you like pattern match them and you bring them into the new world. So like on the iPhone, literally what we had were the interfaces were like paper and wood and leather, because we're like, oh, you can touch it. What are the things you can touch? It's like paper and wood and leather. So let's make everything look like that. And And we had maps on the desktops. We ported maps to the phone, and it literally took us about 4 years of the iPhone to realize that actually what we should do is the inverse of that. Like instead of us being able to go somewhere else, we should let other stuff come to us. And it turns out that like Uber and Instacart and those kinds of things are the killer apps. DoorDash, like those are the killer apps for the iPhone, right? And I don't think we've quite hit that point yet with DeFi. Like I think we're starting to scratch the surface on that. Like AMMs kind of get there, and some of the work that people have done recently. But I don't think we're quite there yet. I think we're going to see some really like mind-blowing stuff over the next 2 to 3 years where people sort of unlock the real power of DeFi on chain. And then the other sort of use cases we see, I think stablecoins are obvious. That's huge. We're starting to see some really interesting experimentation around different types of collateral and algorithmic mechanisms on these stablecoins. I think we're just starting to see the beginnings of being able to move money and payments on layer 1 chains that are specifically designed for this, which was the original purpose of this stuff, if you remember. And so I think I'm very excited about things like MobileCoin with its signal connection. Or Facebook was trying to do with what's not called DM. So I think just generally payments are going to be a really killer use case, and international payments and immediate settlement. I'm excited about NFT use cases. You're already starting to see things like NBA Top Shot, from the Dapper Labs CryptoKitties crew. I think that's like pretty interesting, and you're starting to see people play there. You're starting to see musicians and artists come into this, which I think is really promising because they're often early adopters of technology, and so just people selling NFTs is as like a really base thing. And so you're seeing things like crypto voxels or Zora, people playing in that world. I'm very excited about. And so I think all of those things, when you start looking at them, we're just starting to scratch the surface of how developers are going to unlock all of this utility. And so I think over the next 3 to 5 years, we'll actually see the really interesting stuff.
Yeah, I think part of what we're seeing there is just an increasing number of purpose-specific layer ones. I think there's been a year or two of sort of the Ethereum killer, general purpose layer 1 blockchain, and with platforms like Filecoin, with Dapper's Flow, which is obviously more game specific. I think that's what we're going to start to see in the next year or two, more purpose-built, purpose-specific layer ones, really trying to solve more specific use cases as opposed to just, providing a general development platform. I don't know if you guys are seeing that, Kyle, Avishel.
One quick thought on that, and I'll get in, Kyle go, is I think that's really, that's exactly right. Even the layer ones that started as all general purpose have switched to sort of saying, we need to like find our niche. And so, whether it's, I think Polkadot is going, interestingly in the DeFi direction to compete with ETH.
Yeah.
But, like Flow is going games, Near is sort of building interesting bridges over to ETH and talking a lot more about Web3 and NFTs because their gas costs are really low. So I think it's interesting to see how even the generalized chains are going more purpose specific. I'm sorry, Kyle, I'll get the way.
Yeah, so my point is, so my point was, I agree with you, Avishal, but that right now there are different chains coming up, especially because of the congestion on the layer 1. There are not many things that you can do, but before these layer 2 solutions can actually pick up and get more and more users, the onboarding and offboarding is required to be simplified. That's the biggest hurdle right now today, if I talk about whether it is a Binance Smart Chain, whether it is Matic, Polkadot, or the Optimistic, which has just come out. So there are all these protocols, but yes, we are talking about the journey on the path where we are, the cross-pollination across cross-chain communication, cross-chain utilization of what is available where, instead of building everything everywhere, is where we can see the industry to be heading towards. Like I can see a lot of interest being generated in terms of cross-chain or multi-chain rails, to be honest with you, whether it is about the lending rails, the aggregation of liquidity part. So those are the areas and direction we're going to see a lot of traction and stuff. This is again part and parcel of building the infrastructure. So 2017, 18, 19 was the piece when the underlying infrastructure was created by upcoming various different blockchains. Now these rails and infrastructure for running the actual utilization. So whether we talk about the multi-chain onboarding, offboarding bridges, the liquidity aggregation, whether it is purpose-specific rails, like, for example, lending rails, or maybe say cross multi-chain settlement rails, etc., transaction settlement processing rails. So those are the kind of things I can see. I also still categorize them as part of the required infrastructure, which will actually be utilized for taking away inefficiencies and bringing in the level of efficiency that is required by traditional finance, and that's when the real thrust can actually come in like 5 to 10 years, like you were saying earlier.
Yeah, so I think we're going to have functional chains. So think like Arweave and Filecoin in particular stand out for their very, very unique data structures and what they do. The other kind of really interesting new functional chains I would say we've seen are ones that leverage multi-party computation very heavily and kind of what they do. So Thorchain is the big example here. We just led another investment that's not yet announced in another team that's doing something similar with the Cosmos SDK. And then like Taurus is right now in the process of moving towards a permissionless chain. And so it's become very clear to me that the MPC function and like making it permissionless, you kind of have to basically do some sort of chain that's kind of functional specific. Beyond that, I'm pretty skeptical about the need for more chain types. We had a pretty deep dive recently in Polkadot ecosystem, trying to understand what is the value in chain configuration. And like, there's a few theoretical things. So things like you can modify consensus in some interesting ways. You can change gas optimizations, and you can like subsidize things. Those are kind of the three major buckets of things to do. It's not really clear any of those things actually matters. And so I'm pretty skeptical. My general belief is just you want to go as fast as possible at all times using the best, most modern programming languages. And I think that's just kind of a universal like Pareto, like as the optimal point on the Pareto curve. So I think I'm a big fan, and I'm generally a one-chain maximalist other than like these very weird functional things. It's clear that like, at least for the next 2 or 3 years, we're going to have a lot of chains doing a lot of weird things. Polkadot and Near and Solana and Ethereum and whatever. And so the kind of obvious things to do there are like to play cross-chain things. So Thorchain is probably the most obvious example. And we'll kind of see how these ecosystems connect. But I suspect that as the tech stacks mature for these things, and then, once we have an application that like 10 million users a day, 50 million users a day, and everyone's hitting the chain, and that entire tech stack is known and de-risked, I suspect that the second 20 million user application and the third 20 million user application will all just copy the same tech stack. It won't be worth it for them to even bother to try and innovate because they'll say it's just not worth the technical risk. And so for now, there's still tons of experimentation going on. That will continue for definitely at least 12 months, probably 24. But I'm fairly certain that you'll see convergence on the tech stack in relatively short order for general purpose chains.
And what is that convergence, you think, Kyle?
Yeah, we're all in Solana. We're all in Solana.
Of course. Yeah, I mean, I think the part of the success of Solana is that there's so much convergence on one network, on Ethereum, and then you end up, because there's convergence or because there's traffic or maybe challenges or opportunities to improve the protocol that haven't quite been realized yet, whether it's gas fees, scalability, what have you, you do have these other chains succeeding. So I think rather than, they may be ultimate convergence, yeah, but I think there's still plenty of opportunity for divergence because I don't think these chains are solving all problems for all users or all developers yet. And so there is going to be more diversity. I think there's going to be more, where it's purpose-specific chains or high-performance chains like Solana. That's going to continue to happen, certainly for the next couple of years. But maybe eventually we will converge to Solana, right, Kyle?
That's the hope. We'll see.
I would just like to go on record as disagreeing with Kyle.
Perfect.
Thanks for that.
We should create this as a hashtag. I disagree with Kyle.
Yeah, let's blow it up. I'll retweet it.
And the other thing, I think to a certain extent, I think most of you guys kind of mentioned it is NFTs. And then I think we're seeing some really unique use cases of it coming out. I mean, obviously, I think celebrity and artist is one, and then maybe even mixing it up with DeFi is the other one. It's sort of like anything going on there that you guys are looking at that's kind of interesting. Maybe Kyle, you want to kick this one off?
Yeah, so up until about 30 days ago, I thought NFTs were really stupid, and about 30 days ago, I changed my mind. So it's kind of clicked for me why they're interesting and what to do with them. I think the term is generally not a useful term because it describes too many things that are not related to each other. But we are figuring out right now how to think about where will value really accrue in that stack. My immediate intuition is that it's going to be the most obvious segmentation is by medium. So the three kind of obvious areas are text, audio, and images, or GIFs and video. And you can already kind of see like Audius is interestingly positioned for music, Mirror is kind of interestingly positioned for text, and then the visual is like extremely crowded already. There's like at least 6 or 7 Super Rare and Nifty Gateway and all these things. So we're kind of trying to figure out how we want to place our bets across that ecosystem. We have not, we're already in Audius, so like that one's easy. And we're kind of trying to figure out which and how the other verticals we want to play. But I'm very bought into the thesis that digital provenance will be a thing, even if it can be infinitely replicated. In the same way that like I can print a picture of the Mona Lisa and put it on my wall, like, okay, but like that doesn't mean that's worth $1 million, right? There's still real value to the provenance of the original thing. So that light bulb has gone off.
Avishal, what do you think?
I'm happy to state that I used to disagree with Kyle until 30 days ago, and now it seems like we agree.
Oh man, what are we gonna do with the hashtag?
So I was an early investor in Dapper Labs / CryptoKitties like 3 or 4 years ago. I think NFTs have always been really interesting to me personally, and it's because in technology or early stage investing, there's this really simple pattern that you can see, which is that whatever the old platform did, if the new platform just does the opposite of it, and that's actually like a foundational property of that platform, that's really interesting. And so what's interesting about NFTs to me is that it's basically the opposite of the internet. Right? Like the internet was built on copy paste. Like I have an MP3, I send you that MP3 or that photo or whatever, and now you have it too, and I can't stop you from having it, right? And that was effectively what made the internet work, was copy paste. And NFTs break copy paste. Like if I own it, you don't own it. And so all of a sudden, as a venture investor, to me, I'm like, I don't know what that means yet. But as of like 4 years ago, I was like, okay, that means something. I just don't know what yet. And the place where I think I'm increasingly building conviction, other than sort of games and collectibles, which I think is proving out and is just going to get bigger and bigger. I think there are two or three areas that jump out at me. So one, I think it does open up the idea of, can there be purpose-driven chains that are better for NFTs, either through tooling or through some fundamental primitives or through gas optimization, because NFTs kind of get crowded out on Ethereum. And so that's where things like Near or Flow are really interesting to me as layer 1 chains. The other area I'm personally excited about, but it's, in part, I acknowledge I'm biased because of my background from Facebook, is I think the intersection of social and NFTs is going to be really interesting. I think the social layer of the internet is fascinating to me because, if you'd ask people 15 years ago, like, what is the search space for social stuff? Like, how many variants of a social network could you have? How many different kinds of graphs could you have? You probably would have said like, well, there's like your friends and your coworkers, and I don't know, maybe your close family, and that's kind of it. So you would have sort of like imagined 3 social networks, and that's not how the internet worked out at all, right? Like we actually got TikTok and Snapchat and LinkedIn and Twitter and like all these regional networks, and so like the explosion of social and the types of graphs and the types of interactions you have was so much more rich than I think people originally imagined. And so what that says to me is like, actually humans as social animals are going to find ways to interact with each other that are novel and interesting and probably much more varied than we can imagine. So I think somewhere in the intersection of like social and NFTs is a really fertile ground, and we're seeing a lot of experimentation there. So like, what does it mean to for example, like creator coins? Like we've seen a bunch of stuff around this. It's all V1 so far, but like, what does it mean to have a community where entrance into the community is controlled via a fixed supply of NFTs? Or, what does it mean for an artist to to print a piece of art, and everybody collectively owns that art by slicing that art into a bunch of different NFTs. There's like all sorts of really interesting social dynamics that I think are going to come out here, and humans as fundamentally social animals, I think that's one of the first areas where these things will pick up.
I'll move to you, Graham. What do you guys, any comments on this?
On NFTs, I mean, we work with Dapper on to help them on Flow. So, you know, we definitely have, we see some action in the space. You know, I'm personally a little bit, I'm maybe like 31 days ago relative to Kyle. You know, I'm still not quite there. I can definitely see value with respect to collectibles, with respect to, you know, trying to tap a fan base or fan audience. You know, seeing what the Dapper team's been doing with the NBA, I think that's really exciting. So there's definitely some niche. Well, these things aren't necessarily niche. They're still pretty large markets, but I think there's going to be certain segments where NFTs are working. But you know, it's hard for me to really buy into, say, artwork as NFT being a big thing outside of just pure ownership. So, but yeah, we'll see how it plays out. So. Yeah. Trying to disagree with Kyle without fully disagreeing with Kyle.
I'll
get there.
The thing is, I'm giving you post 30 days, so you can pick one side and disagree with one side.
Can't be on the fence.
Yeah, Ankit, I'll jump to you then. Just sort of, I think get off the NFT bandwagon, and I want to go deeper into DeFi a little bit here, in terms of. Like, what do you see in terms of like the most needed, I would say, you know, thing that we need to see in DeFi right now?
So basically, what I think what we need to see in DeFi right now is, one, enabling people to get in and out easily, because with them, one of the biggest problem that people face right now is the gas fees, which make them stay away from real life transactions on Uniswap maybe, or any DeFi protocol to interact with when you talk about layer 1. So essentially that's where the layer 2 are playing an important role. But when you talk about layer 2, there are problems of going in and out. So it's like, you know, a two-sided sword when you talk about DeFi today. But there is so we first need to solve these fundamental problems before we get into more heavy on the functional problems. So this is my view on how the important adoption of DeFi will come in. So we actually, as a company, also thought about starting first with layer 2, focusing on the layer 2 blockchains. But then when we have started to work deeper into that, we are finding the problem of onboarding, offboarding of users from layer 2 blockchains. And when you go on Ethereum, the problem is gas. So these are certain fundamental problems which are required to be solved before actually the functional things can be built in. As I mentioned before, if I have to mention something about the functional side, DeFi, the capabilities of DeFi in terms of enabling people to use their capital, earning interest by liquid staking or any of those methods, versus them to be able to still use that position to leverage their other capacities or unlocking that particular capital, is another thing where we need more and more solutions to be coming up. And I can see angles on those coming up. And third most important, where also I'm seeing some more traction coming in, is basically right now most of the DeFi, when we talk about, is all concentrated around the EVM based blockchains, especially Ethereum ERC20 based ecosystem. So in 2017, 18, we saw a lot of non-ERC blockchains also, like NEM Foundation, you have LTC, you have Bitcoin Cash, a lot of these communities and tribes which are there. So the rails to connect these blockchains also onto ERC20 is another area which requires a lot of stimulus and to act as a catalyst to increase the acceptability of DeFi.
You know, from an investor standpoint, I think there's a couple of things that investors are thinking about from a DeFi perspective, and I'm sure you guys have got some other thoughts on this. You know, one aspect is just around trying to identify what are the up and coming new DeFi protocols. How do I invest in those things early? So there's kind of that whole world. And then the other piece is yield farming. How do I maximize yield? They may be other segments, but they seem to be kind of the two main segments. And from access to protocols, that ends up being kind of a classic sort of token sale. How do I hear about the protocol before the token's listed kind of problem? So that's almost a token issuance problem. But the yield farming piece is definitely obviously still pretty hot, and a lot of investors trying to understand, how do I take advantage of what's happening there? And a lot of folks obviously can just do that directly, whether it's providing liquidity to Uniswap or what have you. But there's a large swath of investors that don't know how to take advantage of those opportunities, either don't know how or are scared to, because maybe they don't understand the technology, or they want to pick up the phone and call somebody if something goes wrong, et cetera. And so there's this huge amount of capital that's being left on the sidelines, just waiting to participate in DeFi, because I think a lot of people are really interested in it, but they're not jumping in because of some of the issues that Ankit raised, and security issues. And I think if we can solve some of those things, and part of that's some of these more decentralized finance opportunities, like what Binance is doing, OK is doing, CoinList is doing some of this stuff too, and there is a ton of interest. Anytime we ever do anything that's a centralized offering for a DeFi opportunity, people jump on it, and I think there's going to be more of that going into the new year.
Yeah, Kyle, is that something you guys are looking to invest in? I mean, it seems like a huge opportunity, right? I mean, in terms of trying to get more of the existing users from different applications into DeFi.
Yeah, I mean, this is something we're going to see happen soon. I think the first real example of this is about to go live with what Sam is doing with Maps and Oxygen. I don't think they fully have talked about all their plans, but I mean, I think they have said, right, like there's like 100 million users, something using this app, and they're going to put DeFi in it and see what happens. It's kind of weird because it's a mapping application. Like, why does it have a wallet in it? So, but like, they're going to try. Like, we're going to see what happens. I suspect we're going to see a lot more things of that nature over the next few years. They won't necessarily be like led by an existing crypto company, like in the case of what Sam is doing. But we're going to see a lot of people with existing user bases turn on DeFi. Well, one thing we saw happen at the end of 17, early 18 was a lot of companies said, okay, crypto is going to be important for, like, how do I leverage this and do something with this intelligently? And they all were like, okay, how do we build? And they looked at Ethereum and they were like, this is like, we're off by 7 orders of magnitude of the level of scale we need. Like, come back in 3, 4, 5 years. So all those people are going to come back. We'll see which kind of tech stacks they end up building on. But like, that's definitely going to happen. And I suspect that the first one of those applications that is, mildly successful will be larger than all of existing DeFi combined. And so the scale of like true user counts outside of existing DeFi is pretty breathtaking. So I'm excited to see that happen. And I think we're going to see a lot more stuff like that happen that's going to have big in-impacts on the entire ecosystem.
Yeah, Avishai, I think that goes back to what you said earlier, right? I mean, it goes back to we're just at the beginning of this thing, and then sort of the magnitude of the user base that exists outside of the existing DeFi or anything that's existing in crypto is much significantly larger.
Yeah, 100% agree with you, Wei. Still disagree with Kyle. No, I think on this one, Kyle's point is exactly right. The scale of, I mean, DeFi in dollar terms and user count seems large today because we're all used to crypto numbers. If like Facebook is able to get DM working and sort of push that through, you're talking about 1 billion users, right? It's going to dwarf anything we've seen. And I think to what Graham was saying, I really agree with this too. I think that the nugget there that is going to happen is there's so much demand for DeFi and more generally in the world, there's all this capital that needs yield. And we're in a zero interest rate world effectively. And DeFi is one of the places where you can generate yield. And so I think there's a very large opportunity for CeFi players to come in and generate yield from DeFi. And I think the existing financial folks will try. I think it's a really interesting opportunity it's a really interesting opportunity for existing crypto companies like CoinList and Binance. Because if Binance were to flip that on, everybody would opt in. Like every Binance customer would just opt in. And so it could be a fantastic, business opportunity. And I'm sure people smarter than me at Binance are thinking about it. But yeah, I think it's a really big opportunity, like bridging CeFi and DeFi. I think generally speaking, because it's so hard for most people to get into DeFi, I think is a really large untapped opportunity.
Yeah, I think part of the challenge there is that the rich yield it's not really yield in a true sense, in that so these are almost like sort of promotional offerings, which is sort of the irony that these things are meant to be DeFi applications, but there's a centralized team or to some degree a centralized team that's just determining these kind of short-term rewards that you may get for a particular protocol or not. So what we're seeing is a lot of investors are just kind of moving around to wherever the offering is. And it's a lot like credit cards, whoever's offering the sweet intro rate, you kind of move to that card and then you move to the next one. So a lot of that activity is happening. I think over time that'll settle out, but in the short term, for platforms like us, Binance, OK, et cetera, part of that, the offering is for us to do a lot of that hunting for the investor, because that just takes a ton of work, and people don't want to have to do that. But yeah, that's the short-term opportunity. I don't think that that's going to be a long-term thing. So those rich yields, we're not going to see that indefinitely.
I'll speak a little bit. I'll summarize sort of like what Binance is like, sort of the house view on DeFi, and then why we sort of look at it. It's there's a tremendous amount of risk when you stake, when not only when you stake users' money, but when you advocate that staking. Then sort of just given the amount of the lack of knowledge in terms of some of the new protocols that's coming up, even if it's on a mature chain, unless you've gone through every line of the code base, you really that's a lot of risk, I think, from a centralized exchange perspective, especially you basically putting your brand out there for something new, right? And you're basically selling a wealth management product to your users, and then you're basically putting your seal of chop on it. And there's a lot of the road is paved with dead bodies when you start selling wealth management products as a centralized platform, right? So I think there's a tremendous amount of risk, and I think so I think that's something that when you're coming up, you're obviously less aware of it. But from our perspective, that's something that we're extremely cognizant of, especially when we promote things, I think, to our users. That's probably the number one thing. So that's why we've been sort of trying to do like bunny hops, and just do like a bunny slope for DeFi people that want to try it, which is our launchable product. If it's staked over like about $1 billion plus, and we've obviously sort of at current market value, we looked at it during our year-end review, we've distributed almost about $100 million of tokens through our launchable platform, through all the participants, right? And then some of them have actually performed quite well. Like if you've just held on to some of them, a lot of them hit all-time highs in the last few weeks. So I think that's something that's sort of like the entry level, kind of like, just staking plus airdrop plus sort of like listing. These are some of the things that we can offer. And then that'll get people to sort of, once you get to the bunny slopes, you can check out or emulate that in on a centralized platform. Then you can start moving your tokens and try it out into other platforms. I think that's something that we're looking at. Because at the end of the day, I think most of the users still want something more like easy. I think that's probably that easy and safe. I think that goes back to sort of how people value their money and their investments. So I guess we're coming. Anyone has raise your hand if you want to sort of like last comment here. Maybe we'll do a round table. Do sort of everyone gets about a minute to sort of to wrap up any views you want to give a shout out for, anything you guys want to promote on your end. Ankit, I'll let you start off.
So in my perspective, DeFi has a long way to go, though the road and the path is already carved out, and we all have to keep building on those areas, be it cross-chain rails, be it building more opportunities for liquefying the people's investments, or we are talking about offboarding and onboarding on cross-chains to bring in efficiency onto main chain until we get Ethereum 2.0 kicking, and all those particular contracts working on Ethereum 2.0 platform. So these are my 2 cents, though, and many more new protocols are going to come in. As I said, that right now is the time for DeFi infrastructure to actually get in place, like we had earlier, the blockchain infrastructure to get in place.
Graham?
Yeah, I don't know if this is exactly what you're looking for, but I think 2021 in a lot of ways is going to be back to the future. In the same way that Bitcoin had its fair launch, where miners are the ones that get rewarded, contributors to the protocol get rewarded. That's what we're going to see going forward with a lot of the high quality projects. We've already started to see a big movement in this direction. DeFi fair launches are like that. Stake drops like New Cypher's Worklock, Oasis's Rose Garden are like that. Parachain lease offerings or parachain crowd funds or crowd loans operate in a similar fashion. You have to commit capital in order to earn something. So we're going to see more and more of that. And again, it's like back to the future. It's like back to Bitcoin 2009.
Avishal?
Yeah, I love that. It's putting the decentralized back in decentralized finance. That's awesome. Yeah, I totally agree with Kyle about a lot of stuff actually in reality. And so I want to just say thanks, Kyle, for being a good sport. We've actually co-invested on a bunch of things together, but it's more fun on the panel to just disagree with them all the time. Yeah, I don't know. I think we covered a lot of ground. I'm pretty excited about 2021. I think it's the infrastructure investments that people have made, developers have just been heads down building for the last 2 to 3 years are going to start to bear fruit now. And I think it's going to be really exciting to see. It's going to be a really great year. I'm looking forward to it.
Kyle, I'll let you finish so nobody has a chance to disagree with you here.
No, I appreciate you all. You've been a good sport. It's always fun to disagree. I agree. It's good. I agree that it's better to disagree on panels because it makes them more interesting. We're super excited about 2021. Multicoin is working on a couple of new things that we haven't announced yet that I'm super excited about. Those will become public soon. And the space is taking off. This shit's happening. So I can't wait to see it all go through.
Great. All right. I want to thank everybody for first of all, thank the panelists, and then I also want to thank the viewers at home or wherever you are for sitting in and spending time with us. All right. Take care, everybody.
Thank you very much, Wei and the panelists. Welcome back, everyone. That was a great discussion covering lots of things from technology to NFTs to DeFi and also community. And speaking of, big shout out to all the people that are commenting on the YouTube channel. Really enjoyed your discussion on the benefits of higher education or not. Speaking of, you can always get in contact with us at Binance. Use the hashtag Binance Blockchain Week or also hashtag I disagree with Kyle. So, Kat, what's coming up next?
All right, so now we'll have a fireside chat with Don Song, CEO and co-founder of Oasis Labs, and Gabriel, head of strategy at Blockshow. Welcome, Don and Gabriel.
Good morning, good afternoon, good evening. Anywhere in the world you are, we are now on day 4 of Binance Week. Binance Week is obviously hosted by Binance, and we are covering the latest trends, heartbeats, and everything that's going on basically in the blockchain crypto space. If I'm not wrong, it's probably the 3rd edition. Binance has already done it. And with me is a lady that probably needs little to no introduction, if I may say. So she's the founder of Oasis Labs. And she is also a professor at the University of Berkeley. She teaches computer science. It's quite unique because the University of Berkeley is also one of the first universities which I know that has actually have their own blockchain association. You've got blockchain at Berkeley and all these things. Fun fact for you, the guys that do San Francisco Blockchain Week, the genesis, the start of it actually came out of University of Berkeley, right? And at the same time, she's also multi-award winner. She's won multiple things. She's a very respected. In fact, and we were just discussing this beforehand. One of the, when you talk about like things like data economy, privacy, either on a enterprise level or a personal level, especially in the blockchain space or in the web, right? You definitely are, one of the first things you're definitely going to hear about is definitely going to be Oasis, right? And from that matter as well, you're definitely going to hear about Dawn. And right now, literally, I have Dawn here with me. So Dawn, how's it going? How are you?
Hello. Hi, thanks a lot for having me here. Yeah, it's great.
Yeah,
thanks a lot for the great introduction.
Thank you very much. So we're going to start off a little bit differently. Let's not do that, oh, what's Oasis? What do you do? And all that kind of thing. Maybe, I don't know whether anybody has asked you this question before, but Oasis Labs, tell me, what inspired you to start it? What kind of like made you like, you've done, this isn't the first startup you've done, right? But why Oasis Labs? What made you decide that I'm going to do this?
Yeah, that's a great question. Right, so this is not my first startup. I have done a couple of startups before, and actually all these startups, they all share the same thing. Essentially, at UC Berkeley, as we develop research technologies, and some of them we think are ripe for really bringing to the real world to have impact in the real world and really help the community, help people with the technologies that we develop. So for Oasis, it's also similar. My research group has been doing research in privacy in blockchain for a long time. And when we see that blockchain has such huge potential, but at the same time, the blockchain infrastructure really needs a lot of help. And that's really the motivation why I started Oasis.
Nice. And you guys kind of like, claim to fame was kind of like, I think when people really started noticing you guys was after 2018, when you guys raised your first round. If I'm not wrong, it's been your only round so far, right? So maybe just to give people and all of us, I know the space changes very, very quickly. Sometimes when we look at DeFi, for example, the space literally changes every month, right? There's always something new. So maybe in very short context, can you give the audience and obviously myself, what's exactly happened to Oasis Labs? Kind of like a broad overview, 2018 to now, what's been happening within the business?
Yeah, okay. Yeah, that's a very good question. Really, the team has been busy in all fronts, developing technology, like both on the blockchain side, also the privacy secure computing technology side, and also finding real-world use cases and the actual deployment of the technology. And so really, and also building up the community, working together with the community. So really, it's progress in all fronts, as it's been really exciting.
Right. So let's drill down a little bit on that. So obviously the mainnet's launched, right? This Oasis protocol, and I think especially like middle to end of 2020, you guys have also announced quite a number of partnerships. I think BMW is one that comes to mind. Maybe can you give us like from a very layman perspective, what exactly are these go-to-market strategies? What exactly is it like? I mean, what I'm trying to get here is how do these even come about in the first place? Is it like they approach you, you approach them? What's the kind of like working relationship there?
Yeah, okay. Yeah, happy to share. So we actually have announced a number of partnerships, especially in enterprise use cases. BMW is one example, and also we have this CryptoSafe Alliance together with Binance.
Yeah.
Right. So So oftentimes, right, so for these different use cases, I can explain the use cases a little bit first.
Yes, please.
So let's start with the crypto safe. So that's the also the first alliance for across different exchanges to help different exchanges to share threat intelligence so that they can better fight fraud and attacks and so on. So as we know, these exchanges are under attack all the time, and there's a lot of fraudulent uses and so on. And each exchange, when they just fight these fraud and attacks itself, it's a lot of work. It's really challenging, and also oftentimes in the same group of attackers may be attacking these different exchanges at the same time, and hence sharing threat intelligence is a huge help to these different exchanges. But of course, at the same time, they are in a competitive relationship, and they may not trust each other, and so on. And also, of course, the information is extremely sensitive. So this is exactly where both blockchain and privacy technologies come together. Is that we actually want to enable a decentralized system where different parties are mutually distrusting, but at the same time, they want to collectively compute some over their individual sensitive information to together be able to achieve some common goals. For example, identifying whether some wallet address is from an attacker, or identifying other types of threats, and so on. And so actually Binance came to us, given that they've heard about our technology, and our technology is very unique and it's really, really well suited for this problem. With the privacy technologies that we enable, it can help these different exchanges to compute over these sensitive data in a decentralized, distributed manner, in a privacy-preserving way. And also with the blockchain, it provides a immutable log of these activities, and hence there's audit trail and so on as well.
So what you're saying very simply is that, as you mentioned, right, exchanges, they're competitors. They will all, like whether is it, let's not name any names, but like exchange A, exchange B, all competitors. So basically you're saying that this allows them to all work together, share the same information without compromising like business secrets, for example, or like sensitive data or anything like that, but yet still being able to work together towards a common cause.
Right, exactly. So here, they're not actually sharing the raw data. So for example, exchange A will not actually be able to see the data from exchange B, but what we enable is this type of privacy-preserving secure computation in a distributed manner, so that without actually sharing the data, the different exchanges can together compute, do this distributed computation over the data, and for example, do certain queries across different data belonging to these different exchanges, and to achieve some common goals, right? So for example, you may want to know, like if you find one attacker, you want to know whether it actually appears at other exchanges. Also, examples like that.
Okay, and so on that note as well, is this kind of like and I don't know whether you've addressed this before, but is this kind of like Oasis commercialization strategy? Meaning that how do these, okay, I'll be very, if you don't mind me, a little bit blunt, but is this, when I say commercialization strategy, basically this is how you go to market, this is how you guys become a business, so a proper business, so to speak.
So this is certainly one of the directions that we are exploring. So when you look at this technology, the crypto safe is only just one example use cases, one vertical. The same technology actually can work across many different verticals, including financial sectors, healthcare, and so on, which we also have example use cases as well. So essentially, the way to think about this is that you have different parties, different entities that are mutually distrusting, but they have data that they want to be able to compute over jointly in a privacy-preserving way to achieve some common goals, as I mentioned, and also right. So in this case, you want to have a way that actually runs in this decentralized manner, given the trust relationship. And again, as I mentioned, all these different verticals, they all have demands, they all have use cases for such technologies.
So let's talk about use cases. The first one you mentioned, financial sector. Let's touch a little bit on DeFi, right? I think DeFi is a very exciting space. I think all of us agree about that. However, I think a lot of us also agree it's a bit like the Wild Wild West, right? I think it's a bit cowboys and bandits sometimes, right? There's obviously a lot of issues with privacy. I mean, people are still involved in it because there's a lot of potential, it's lucrative, etc., etc. So maybe using DeFi as a use case, how would privacy then be implemented without compromising on, like the basis of what DeFi actually is, which is decentralization?
So actually, right, DeFi is a really exciting space, in particular for this type of technology. Actually, I would say several different fronts. So one, of course, privacy itself can help protecting sensitive information in these DeFi applications. For example, we have done a version of a private compound, just as an example. And so essentially all these financial applications, they all have very sensitive information. And there is users, user information or transaction information and so on. And I mean, today, as we know, these DeFi applications, they don't have any privacy protection. And as we move DeFi into the mainstream and to really get greater adoption, especially for institution use, as we know, for these institutions, like security and privacy is
it's the top
paramount.
priority. Yes.
Right, exactly, important for them. And hence, for a solution that can actually get mainstream use, get institutional adoption, you really need privacy. So that's one example. And another example is that having privacy actually helps even defending against certain attacks. For example, today in DeFi, oftentimes we see front-running attacks where attackers see users' transactions and then try to, either by submitting higher transaction fees and so on, like try to just front-run the user and essentially take the arbitrage opportunity there to try to gain an advantage over individual users. And that happens because Ethereum, for these DeFi applications, attackers can see everything, can see all the transactions that are being submitted, and so on. But when you have privacy protection for these applications, attackers can no longer see what's being submitted to the applications, and hence naturally can help prevent these front-running attacks. And so that's another great advantage of what privacy can help.
So you just mentioned, right, attacks, and because in Ethereum you can see everything. Kind of like, if I can ask, what's your personal opinion that these attacks are not news anymore, right? In fact, someone once told me that the potential of being attacked, it's kind of like COVID sometimes. It's not whether you'll get it, but when you'll get it, kind of thing. So like, I've always wondered this, right? And it's also personal curiosity. So why hasn't anybody done anything in the last 6 to 9 months? Why are we only talking about like data protection and privacy now in the DeFi space? Compared to, why didn't we talk about this 9 months ago? Or is it simply because that I'm asking the wrong question and the technology wasn't ready?
Let me try to understand your question a little bit better. So I think people do care about it. It's just that, right? I guess it's just that.
Why wasn't it implemented? Why hasn't it been implemented a little bit more aggressively in the last 6 months?
I see. Similarly, you can ask, why is the gas fee still so high on Ethereum, right? Like, people know about the problem and everybody wants to solve it. So sometimes these problems do take time to address, right? So for example, that's also why we are building Oasis, is to help address many of these issues.
All right.
Right. And so another aspect I want to mention how privacy can help DeFi, which I'm really excited about, is this data economy. As by combining blockchain technologies and privacy computing technologies, we can enable this new type of assets that I call data assets. So for example, Oasis, another use case in healthcare is we launched a service in beta with a genomic company. And this is the first time for users to become owners of their genomic data. So users now can have their genomic data stored in an encrypted fashion, and users have control over how their data can be used. And for example, they can give consent to the genomic company and have the genomic company run analysis over users' data, but on the Oasis platform, they will run the genomic analysis in a secure execution environment. So the data will not be leaked during the computation. So this way, even though users' data isn't being used, user can still maintain control over their data. And in this way, essentially, we can create a new type of assets that I call data assets. So in this way, it's data assets in the genomic domain. But you can have data assets in many other domains, including financial and IoT and many other domains. So then now, with this data assets, you can combine that with DeFi, and it can really help DeFi grow into a new dimension. Because for DeFi, the core for DeFi is assets. You need to run applications assets. Without assets, there will be no DeFi. But so far, for DeFi, the asset that manages these native tokens. For example, on Ethereum platform and so on. It's really important to be able to bring in new types of assets. That's how we can grow the use cases, how we can really enable completely new applications.
Okay.
So that's also one that we are really excited about. And when you talk about data assets, the reason that it can be an asset is because you can protect the rights of the data. You can maintain control over the data. And for that to happen, privacy is a must. And hence, you really need privacy to actually enable this new type of asset.
Privacy is a must. I think that's probably going to be the saying of this session which we're having right now. If there's one headline I can think about right now, is that I think it's simple yet complicated, if I may say so. Privacy is a must. I think that's the ultimate title, for the conversation we're having right now. We've got time for a couple more things. I just want to, if you tap your brain a little bit. When you talk about personal privacy online, data protection, everything like that, how do you see people, either from your role, in Oasis, or even at the university itself, or yourself or among friends and everything, how do you see that this conversation of privacy affecting people now, say compared to maybe 2-3 years ago? I think a very good example I would give is whatever that has happened with WhatsApp. 2-3 weeks ago, everybody was like, "Oh, there are new terms and conditions. Oh my God!" And it's like everybody's like downloading Telegram, everybody's downloading Signal, right? Everybody's trying to get on it right now. Or are already on it. I mean, people like us, the first time we spoke to each other was on Telegram, 2018, right? We are like old school guys already and everything like that. I just want to get your opinion. What's the feel sentiment of too much privacy in today's world? Do you see? Like, are people caring enough?
I would say we are, in terms of privacy awareness and the users' demand of privacy, we are at a more exciting time than ever before. And personally, as a researcher in security and privacy, I'm more excited than ever before. Even just what happened, looking at the response that people had, and how fast the response was, and how widely spread response it is globally for this, WhatsApp issue. And that's amazing. Even I think it's hard to imagine, even just a few years ago, even though we have seen the rise of privacy awareness. It's also rewarding to see that there is a continuous rise of this privacy awareness and demand for privacy and so on. And we really need that in order to actually force changes. So WhatsApp is a great example. I think companies are seeing that they do need to be careful and take responsibilities of their actions. And on the other hand, so for example, I think in the browser space, we have seen tremendous progress, right?
Yes.
For example, multiple entities are disabling third-party cookies and so on, and that's a huge advancement. And so Google came out with some new proposals on how they can disable third-party cookies and do ads in a privacy-preserving way, and so on. And I think, yes, these are still at the experimental stage, but the fact that these activities are happening and are being pushed out, I think is a great success of the whole community working tirelessly over the past year, many years to get us there. Because you can say that, maybe users don't care enough about privacy and so on. But this continues, actually, this conversation about, no, that's not really true. And I think we do hear these great voices, both from individuals and also overall the communities. And the voices are getting louder and louder. And hence, that's why we see from the government side, there are privacy regulations, and also for many companies, privacy is top of mind for them, because they know if they don't do this well, the potential pushback.
Actually, another name, in the space, another name actually comes to mind. The lady formerly from Cambridge Analytica, Brittany Kaiser. As well as a great advocate. For those of you who are watching and have not seen it, everybody has a Netflix subscription, right? So no excuses. But Brittany Kaiser has a great documentary on personal privacy and what they're doing for cookies, etc., on that as well, which echoes very much with what Don is saying. Okay, Don, we've got literally 1 minute left, right? Why not let's wrap things up? I'm going to leave like 50 seconds because I need 10 seconds to say goodbye. The last 50 seconds for you. Wishes for 2021. Anything at all. Anything at all. Could be about Oasis, about yourself, about the industry, politics, for all I care. Wishes for 2021, please.
So first, of course, year 2020 has been an extremely challenging year for everyone.
It is.
So, of course, we hope, number one, is that year 2021 will be very different, and COVID will be under control, and people will be able to actually see each other in person again.
Yes.
And with that, we do hope that from the Oasis perspective, the technologies that we have been developing, we hope that it will really go to the next level, and then we'll see more use cases and more adoption. And we are looking forward to working closely with our community to really grow this exciting space.
Nice, very much. Last shout out, Twitter handle, please, just in case for anybody doesn't know, please follow, I think it's Oasis Labs. It's on Twitter. Don, you're on Twitter as well. I can't remember Twitter handle offhand, actually. Why don't you give a shout out for your Twitter, just in case anybody needs any updates? Donsong what?
Donsong tweets.
Donsong tweets. Easy, we all remember that. Don, once again, it's been a pleasure. Please take care. Hope you have a good 2021 and look forward to hearing a lot of exciting news about Oasis in hopefully the coming months as well. All right, take care. And everyone, we'll be back shortly.
Thank you very much, Dawn and Gabriel, for a great chat. And we agree privacy is a must, and it's great to see the growing awareness around data privacy. And we see lots of users starting to demand it from the platforms and products they use. So great to hear Oasis is responding to that. Handing over to you, Kat.
Thank you, Sarah. Our next speaker is Richard Yan, the co-founder of our kind sponsor, VITE Labs.
Hi, everyone. My name is Richard Yan, and I'm the co-founder of VITE Labs. It's an honor to be a part of Binance annual conference. I'm excited to share with you today what VITE is about, what kind of progress we've been making since our founding in 2018, and what we're looking to do in the near future. VITE is a smart contract platform, and we process transactions at a high throughput and with zero transaction fees. The reason why our network processes so many transactions at once is because the smart contracts are built on a block lattice ledger, or otherwise known as DAG. The reason why the transactions are free is because our consensus algo is delegated proof of stake, and our block producers are paid with roughly 3% annual inflation of the token base and don't require additional fees. Our flagship product is our DEX called VITEX. It has an on-chain order book and matching engine. All VITE native assets trade with no centralized custody on this DEX. This is different from Ethereum-based DEX, for example, because transactions on Ethereum are slow and expensive. So Ethereum can't accommodate use cases like high-frequency trading, but we can on our DEX. Technical features aside, users get VITEX native coins, which we call VX, when they trade on VITEX. They can also get VX by listing new coins, and there are a few other ways to earn VX. In general, users are rewarded when they do a few things in support of VITEX. Also, anyone can make a gateway on VITEX, so that means any coin can get listed as long as they can find a gateway willing to list them. And the owner of that gateway can collect listing fees and trading fees on the coins that get listed. So in summary, since the 2.5 years we started this project, we implemented almost everything we set out to do in the white paper, and we created a product that served real demand, namely the DEX. So what's next? Well, let me first tell you about an observation we made during these 2 years. And perhaps this is nothing groundbreaking, but still worth bringing up. Obviously, many public blockchains have made their debut in the last few years. Everyone is trying to solve the scalability problem. Some have very legitimate solutions and have achieved genuine success in building a community. Well, it's also becoming increasingly clear to us that the blockchain space is moving towards a multi-chain future. So this means each chain is its own tech, community, and network. It's possible it will look like a one chain fits most, but probably not a one chain fits all type of deal. Projects with deep pockets, lots of early adopters, and influential community leaders will certainly try to push for a multi-chain universe. Binance Smart Chain is one example. Also, there is already tech out there making it easy to make your own chains. Think Polkadot and Cosmos. Lastly, there might also be a need for application-specific chains where the community for such apps may not want the health of their network to be subject to the whims of the community of the underlying public blockchain. So we think there will be a lot of needs for cross-chain services that will allow holders of tokens in one chain to participate in activities of another chain without spending additional resources to acquire tokens in a target chain. One example is cross-chain DeFi. So you want to move your tokens from Solana into Ethereum to yield farm on Compound, for instance. So that's what we'll be focusing on next, cross-chain solutions. We'll make VITE become the easy way to cross tokens between chains. And this is how we plan to do it. So Alice wants to move her assets from Bitcoin chain to Ethereum chain. VITE will serve as a relay chain between these two chains. So Alice would request the Bitcoin address from a special VITE smart contract. Then, after she deposits into the Bitcoin address, Relay nodes will notice this deposit and inform a VITE wallet contract. That contract will then mint an equivalent amount of wrapped tokens on the Ethereum chain. And when Alice wants to move her asset back from Ethereum to Bitcoin, the opposite process occurs. She sends her wrapped BTC tokens on Ethereum into a special address. Then Relay nodes notice this and inform the VITE wallet contracts to release the commensurate amount of Bitcoin. Anyone can run a Relay node. To prevent nefarious behavior from Relay nodes, such as colluding to communicate an incorrect transaction in order to steal assets, the Relay nodes are required to provide collateral, in fact, over-collateralization as a security mechanism. Note that this approach is generic enough to work across all source chains and all target chains. In addition, note that in VITE, each smart contract belongs to a consensus group. This means it's a group of nodes responsible for producing blocks for the said smart contract. So this provides decentralized governance for the proper functioning of the relevant smart contracts. So to sum up, the VITE cross-chain solution has both universality and trustlessness. To roll out our cross-chain product, we'll be releasing a number of things, including a detailed white paper and future milestones. We'll also be looking for opportunities to become the cross-chain solution of choice for various source chains and target chains. We're excited for this next step in VITE's journey. Make sure to follow us at VITE Labs on Twitter, and make sure to come and join our Telegram group at VITE_EN. Thank you.
Thank you, Richard, for sharing such important updates. Well, as more blockchains gain popularity, the ability to provide seamless cross-chain experience is going to be something that's really beneficial to users. So, Sarah, I can't believe you already reached the end of today's event.
I know, right? So if there are any topics that you think we missed or any that you'd like to see us cover next time, tweet us at Binance with the hashtag Binance Blockchain Week, or of course, I disagree with Kyle.
So tomorrow's event is dedicated to game-changing blockchain applications in the fields that includes philanthropy, social justice, energy and sustainability, and economic participation. And finally, we want to thank all our sponsors for supporting today's event, Binance Blockchain Week. Thank you to Dodo, Chromia, Frontier, EasyFi.network, Amazon Web Services, Status, Scaled Network, VITE, and Standard Tokenization Protocol.
So thank you very much to the viewers for tuning in, and we'll be sure to join us here tomorrow at 10 a.m. UTC, the final day of Binance Blockchain Week. The future is good.
Bye, guys.
Bye.